Good evening, guys. Please confirm, is the audio video clear? Shall we begin? Yes. So, are you ready? It's going to be a nice, interesting session. It's going to be a lot of learning, a lot of revision. All right. I hope you're ready to give me the next 3 hours of your time. We're going to put in the best that we can, guys. We're 1.5 months before the examination. And at this point of time, every minute we spend has to be spent in a well thought manner. All right. So we will make sure that these 3 hours, if you're giving me 3 hours in your last 1.5 months, then we will make sure that every minute in these 3 hours are going to be filled with learning. All right. So on that note, let's begin, guys. I'm going to start off my discussion on salaries. We will start with some very basic concepts, okay? And then we'll slowly build on to it one by one. I hope you're aware that what exactly this is going to be. This is going to be just a revision of all the provisions from top to bottom from the salaries chapter. Okay, we're doing the revision of provisions. We are not focusing on questions here. Our focus is more on revision of provisions. Let's start off with some basic points. Listen, our very first discussion under salaries. If I want to put something under salaries, first of all, obviously, the employer-employee relationship should be there. Now, what do you mean by the employer-employee relationship? In simple words, there must be a master-servant relationship. If the employer is giving me any money, okay, then this money will be taxed under the head salaries. Basically, employer-employee relationship is required. You know why I'm telling you this? There's a reason why I'm telling you this. See, listen, so many times from the partnership firm, even the partner gets salary, right? Do we put this under the salaries head? No. When the partner gets salary from the partnership firm, we put the salary where? We put this into the PGBP head. Guys, listen, participate in the chat box as much as possible, okay? Only then it's going to be as effective as I want it to be. All right. So when the partner gets salary from the partnership firm, even though I use the word salary, I put it under the head PGBP. I do not put it under the head salary. Why not? What is missing? I cannot say that the partnership firm is employer and partner is employee. There is no employer-employee relationship between the partnership firm and the partner. And that is why whatever salary my partner gets from the partnership firm doesn't come under the head salary, goes to the head PGBP instead. So what we have learned through this is that whenever my assessee gets any money from the employer, only there's an employer-employee relationship, only then it goes under the head salaries. Okay, so this was my first concept under the head salaries, that employer-employee relationship is required. Now, similarly, when MPs, when MLAs, when they get money, whatever money they get, whatever remuneration they get, can I put this under salaries, guys? Can I put this money under the head salaries? No, it doesn't go under the head salaries. Also, there is again no employer-employee relationship. But this money, which head will I tax it under? I will tax it under the head IFOS instead of salaries. All right. So the very first learning, guys, employer-employee relationship is required. Only then I will put any income under the head salaries. When partner is getting salary from partnership firm, there's no employer-employee relationship. When MP gets remuneration, when MLA gets remuneration, no employer-employee relationship. Hence, I will not put it under the head salaries. I'll put it under the head IFOS instead. Okay. Now I'm taking you to the next concept, guys. We're going to be discussing about two concepts together. First of all, we will discuss about something called as foregoing of salary, and then we will discuss about surrender of salary. Foregoing and surrender, not very important from the exam perspective, but they are a part of our syllabus, so we might as well revise them. MCQs, you may find a question here. All right, now talking about foregoing of salary, listen to me carefully. Let us say the employer gave me 1 lakh rupees salary, okay? And out of this 1 lakh, I told the employer, this time don't give me full 1 lakh. I told him, you deduct 20,000, you donate this 20,000 towards some charity, and you give me only 80,000 rupees. So what's my actual salary? 1 lakh. But how much am I getting in hand? Only 80,000. Where is the balance 20,000 going, guys? The balance 20,000 is nothing but I'm telling the employer that you don't give me that 20,000. Instead of giving me, you donate it towards some charity. Now my question to you is that what's going to be my taxable salary? Will it be 1 lakh or will it be 80,000? Which of the two will you tax? you will definitely tax 1 lakh only. This is going to be taxable. This 20,000 rupees, I have foregone this 20,000 rupees. The salary which I forego will still be considered as my salary. It will be treated as if I have received the full 1 lakh, and after receiving 1 lakh, I have used 20,000. It will be treated like that. So can I say that even if the employee foregoes salary, I can ignore that adjustment? Yes, because even the salary which is foregone, even that will be considered as taxable. The full 1 lakh amount will be taxable, guys, and not just the 80,000 rupees. You will see, no doubt, in hand how much money I got. In hand, I got only 80,000, but you will treat it as if I got the full 1 lakh, and out of 1 lakh, I spent 20,000. So how much I got, how much I earned? 1 lakh. 1 lakh will be my taxable salary. Okay, then talking about surrender of salary. If my employee surrenders salary under a specific act, what is the act? There is a specific act for this purpose: voluntary surrender of salaries, exemption from taxation act. Does anybody know the year of this particular act? Yes, guys, same as Income Tax Act 1961. So in case I surrender salaries under this act, voluntary surrender of salaries, exemption from taxation act, then to this extent, my salary will not be taxable. Like for example, same situation if I take again over here, 1 lakh is my salary. Out of that 1 lakh, I surrender 20,000. Under this act, I surrender 20,000. Net in hand, how much I got? Only 80,000. So in that case, how much will be taxable for me? Only 80,000 will be taxable for me. So listen, guys, the terminology makes a huge difference. Are you all understanding this? If I forego my salary, then it will not be taxed. All right. If I forego my salary, you can ignore that adjustment. The full 1 lakh you will tax. You will treat as if I got the full 1 lakh, and out of that I kept 80,000 and I spent 20,000. So how much I got? 1 lakh I got. So how much you will tax? Full 1 lakh you will tax. But in case I talk about surrender of salaries, in surrender of salaries, I am giving up my salaries under voluntary surrender of salaries, exemption from taxation act 1961. Come on, guys, repeat the name of the act. Voluntary surrender of salaries, exemption from taxation act 1961. Under this act, if I'm going to surrender the salaries, then to that extent you will ignore the salary. So out of 1 lakh, I surrendered 20,000. How much I got in hand? 80,000. Only 80,000 you will tax. Guys, listen, please keep the objective very clear. You're going to be discussing the entire salaries chapter we're going to be discussing now, after which you're going to open straight away on the day of the examination. So listen with that much focus, listen with that much attention. Don't bother about whatever I write over here. Whatever I'm going to be writing over here, I'll somehow find a way and I will send it across to you all. You're understanding? You just make sure that you sit and you absorb and you try to, listen in such a manner with so much focus, with so much attention, that this chapter is done and dusted with these 3 hours. Straight away, you open your books for this chapter only on the day of the examination. Keep that objective clear, all right? Anyways, let's come back. So 3 simple concepts we have discussed, guys. Our first discussion was employer-employee relationship is required. Only then I will put the income under the head salaries. Then we discussed 2 special situations. If my partner is getting salary from the partnership firm, even though I use the word salaries, is it actually salary? No, there is no employer-employee relationship. Hence, it will be taxed under the head PGBP instead. Then we learned what MP, MLE, whatever income they get, even over there's no employer-employee relationship, so I'll put it under the head IFOS instead. And then we learned, in case I forego salary, then the amount which I have forgone, you will not bother. Still, you will tax the full 1 lakh for me. But if I surrender my salary, do you remember the name of the act? Tell me the name of the act without saying. Voluntary surrender of salaries, exemption from taxation act 1961. One last time, please. Voluntary surrender of salaries, exemption from taxation act 1961. If I surrender my salaries, then to that extent, you will not tax it. Out of 1 lakh, I surrender 20,000. I got only 80,000. So you will tax how much? Only that 80,000. Till here, are we all crystal clear with our discussion, guys? Can I take you to the next concept under salaries? I'm starting off with some basic things. All right. Now listen, if I am a UN employee, and if United Nations organization is giving me salary, will the salary be exempt for me or taxable for me? any salary which I get from UNO, this is going to be fully exempt. Exempt under which law, guys? Even here we have a separate law altogether. We have a law called United Nations Privileges and Immunities Act 1947. United Nations Privileges and Immunities Act 1947. Under this act, whatever salary a UNO employee gets, it's going to be fully exempt. So any salary received by a UNO employee is going to be fully exempt under which law, guys? United Nations Privileges and Immunities Act 1947. Simple point, right? Then tell me, now starting with the core discussion, tell me which section is a charging section in salaries head. At least that section number you should be aware of, the charging section. Very good. Section 15 is a charging section. And what does the charging section say, guys? The charging section says, when do we tax salary? It says we tax salary either on payment basis or on due basis, whichever is earlier. The section 15, our charging section, says that we tax salary on due basis or on receipt basis, whichever is earlier. Payment basis, for example, sometimes we get advance salary, guys. Advance salary, we got the payment first. It's going to be due only later. It's okay. I received it, hence you will tax it. Due basis, like for example, I'm supposed to receive the salary, but employer is not giving me salary only. Employer is delaying. He's not giving me salary. Doesn't matter. Salary is due to me. It will be taxable for me. So payment or due, whichever is earlier. When I talk about payment, advance salary gets taxed on payment basis. When I talk about due, arrears of salary gets taxed on due basis. Do you agree with this, everybody? Are we crystal clear? When I talk about payment basis, advance salary is taxed on payment basis because in advance salary I am receiving first. It will be due only in the future. But in arrears of salary, what happens? It is due today. Employer is supposed to give me the salary today, but he's not giving me. He's giving me only in the future. So when it was due today itself, you will tax it. You will not wait for me to receive it to tax it. So this is section 15, which talks about the taxation of salary. We tax salary on due or receipt basis, whichever is earlier. So with this, we're done learning with the basic concepts relating to our salaries discussion, guys. I'll just quickly run through them with you one last time, and then later we'll start off with the first major discussion. The very first point we learned was employer-employee relationship is required. Then we spoke about MP-MLA. Their salary will go under the head IFOS. Partner's salary, that salary will go under the head PGPP. Then we learned about foregoing of salary and surrender of salary. If I forego 20,000, you will forget about it. You will still tax the whole 1 lakh. But if I surrender salary under voluntary surrender of salaries, exemption from Taxation Act 1961, if I'm going to surrender my salary under this act, then to that extent, it's not going to be taxable. You will tax only the balance 80,000 for me. Is everybody thorough with foregoing of salary and surrender of salary? Yes. Then we learned, in case I am a UN employee, whatever salary I get as a UN employee will be fully exempt. Listen, I was telling you about UN employee. If I happen to be a UN employee, then whatever salary I'm getting from the UNO will be always exempt under the law, United Nations Privileges and Immunities Act 1947. Then we learned that the charging section here is section 15. You cannot forget the section number, section 15, which says that you tax salary on payment basis or due basis, whichever is earlier. Okay, now I'm starting off the first major discussion for you guys. We're going to be starting off with the retirement benefits. And under the retirement benefits, I am starting off my discussion with Provident Fund for you. Okay, now we know that Provident Fund can be of various types. Let us take them one by one. What if it is statutory Provident Fund? Then what will you do? Tell me, employer's contribution. What will the tax treatment be? Employer's contribution to SPF. It's going to be fully exempt. What about employees' contribution to SPF? Whatever I am going to contribute to SPF, what will happen to that? It's going to go under section ATC. Under ATC, I'll get as a deduction. What about interest that I get on statutory provident fund contribution? What about this interest? this interest is going to be fully exempt. All right. And finally, what if I retire? When I retire, what about the amount which I receive from this fund? Amount received from this fund upon retirement, what about that? Even that is going to be fully exempt. So statutory provident fund, life is very simple. Employees contribution fully exempt. Employees contribution goes to section 80C. The interest is also going to be fully exempt, and whatever amount you have received from this SPF, even that is going to be fully exempt. All right. Then what if it happens to be URPF, guys, unrecognized provident fund? Come on, tell me, if it is unrecognized provident fund, employer's contribution, what do you do with employer's contribution? It is not taxable. Right now, it is not taxable. URPF, what is the speciality? Year after year, there are no tax treatments. When will the tax implication arise in URPF? Only when I retire, only when I withdraw the money, only then the tax treatment will start, guys. Do you remember learning all this? Yes, I hope you're able to recall all these provisions. Listen, when I talk about URPF, employer's contribution is not going to be taxable year on year. But in the future, when I withdraw the money, only at that time tax implications will arise. Okay. Similarly, employees' contribution, will I get ATC? Tell me. I want you all to participate and tell me, will I get ATC? No. For URPF, you don't get ATC. What about interest on URPF? Even this will not be taxable. Year after year, we will not tax it. When will we tax it? Only when my assessee retires and when he withdraws money, whatever amount he receives from URPF, whatever money he withdraws, that amount which he is withdrawing, you will divide this amount into how many parts now? Year on year, you did not do any taxation. Year on year, no tax implications. When he is withdrawing the amount, upon retirement, when he withdraws the amount, this amount you will split into totally 4 parts, right? What are the 4 parts? The first part will be employer's contribution. And where will this go? This will go under the head salaries and it's going to be fully taxable. Then interest on employer's contribution, where will this go? Even this will go under the head salaries and it's going to be fully taxable. What about employees' contribution? Now will you give me ATC? No, you will not give me ATC. You will simply ignore this part, nothing to do with employees' contribution. And what about interest on employees' contribution? Where will you take this, guys? Very good. This will go under the head IFOS, and under IFOS, it's going to be fully taxable. Did you understand? This was my discussion on URPF. Year on year, there will be no tax treatment. Only when my assessee withdraws money from the URPF upon retirement, at that time you will divide the money into totally 4 parts. You will see what is the employer's contribution. Employer's contribution and interest on employer's contribution will go under the head salaries. Employees' contribution you will fully ignore, and interest on employees' contribution you will take it to the head IFOS. This was about URPF. Even this you've understood, guys. Yes. Then I want to finish off the other easy one. I want to finish off PPF now. Public Provident Fund. Guys, tell me, in Public Provident Fund, is it necessary that employer-employee relationship has to be there? Only then I can make a contribution? No, even if I'm not working under any employer, still I can put money into PPF. Okay, so in PPF, I will have only own contribution. In PPF, will I have any employer's contribution? No, because PPF is generally for self-employed people. PPF is generally when people are saving money for themselves. Even if I'm an employee, I am saving money for myself. So there will be only and only own contribution. Employer's contribution is not applicable here. Okay, tell me, employee's contribution, my own contribution, where will you give me deduction? You'll give me deduction under section ATC. At this stage, tell me, under ATC, PPF, in whose name can you pay this PPF? Into whose account can you pay this PPF? You can pay this PPF in the account of self, then spouse, then children. Now, children, dependent, independent, major, minor, married, unmarried, does that matter to me? No, it can be any kind of children. Self, spouse, children will be covered. And what about the interest on PPF, guys? Where will this go? This will go under the head IFOS, but under IFOS, what will the tax treatment be? PPF interest is going to be fully exempt. And also, when you withdraw money from the PPF, what will the tax treatment be? You simply ignore it. It's going to be exempt. You will not tax it. All right. So is this discussion on PF clear till here? I have just left the big burden of RPF. Everything else I've completed. Yes, so SPF, guys, employers contribution exempt, employees contribution ATC, interest on contribution exempt under the head salaries. Later, whenever you withdraw, whatever money you receive upon retirement, fully exempt. URPF, no, year on year, no taxation. URPF, when will the taxation arise? Only when I withdraw the money. When I withdraw the money, the entire money I will split into 4 parts. I will see how much is employer's contribution, how much is interest on employer's contribution, how much is employee's contribution, and how much is interest on employee's contribution. Employer's contribution and interest on employee's contribution, both of this will go under the head salaries. Employee's own contribution will simply ignore, and interest on employee's contribution will be taxable under the head IFOS. Okay, then we learned about PPF. In PPF, I told you that there is no question of employer's contribution. PPF comes into the picture when I want to save money for myself. Okay, here whatever money I am saving for myself, I'll get as a deduction under section 80C. I'll get as a deduction, and whatever interest I am getting on PPF, it's going to be fully exempt under the head IFOS. And later, when I withdraw money from PPF, it's going to be fully exempt. Guys, points to be noted. Did you understand this point? Shiva, I'll come to that question. Give me a moment. Did you understand this point? Under IFOS, it's going to be exempt. Did you understand it's going to be exempt under the head IFOS, not under the head salaries? Yes. See, SPF interest is exempt. SPF interest is exempt under which head? Salaries. But PPF interest will be exempt under the head IFOS. All right. Now Shiva is asking us, in PPF, excess interest over contribution of 5 lakhs is taxable, right? That question will never even arise, Shiva, because in PPF, they will not allow you to contribute more than 1,50,000. They will not even allow you to contribute more than 1,50,000. There's a cap on the contribution itself. I'm not talking about ATC limit here. PPF, there's a cap. There's a cap on the PPF that you can contribute only 1,50,000. No doubt, when they made the law, what you're talking about, that 5 lakh excess interest and all, when they made the law, no doubt they spoke about PPF also, but it has no practical implications, because practically they will not allow you to contribute more than 1,50,000 into PPF. Okay, so even in the examination, you will not get a question on that part because it is practically impossible. All right, guys. So this was my discussion relating to PF. All right. So under PF, Statutory Provident Fund, URPF and PPF, 3 of them we have learned. Now we are going to the next discussion, which is going to be about RPF. Now this is where you listen to me extremely carefully. Okay, now RPF, what do you do with employers' contribution, guys? Employers' contribution to RPF, what do you do with this? This will be taxable. It will be taxable under which head? Under the head salaries. But you also have an exempt portion also. How much will be exempt, guys? 12% of salary. So what I will do is, see, in case you get employer's contribution, what will your steps be? Your first step will be to calculate salary for the purpose of employer's contribution. Can you tell me there are how many components in the salary for the purpose of employer's contribution? 3 components. Number 1, we have basic salary. Number 2, we have DA, which is forming part of salary for retirement benefits. And number 3, you have employees turnover based commission. Okay, so your first step will be to find the salary. Okay, then step 2 will be to find out the actual amount. How much was the actual contribution of the employer? How much did he actually contribute towards RPF? Then your step 3 will be to calculate the exempt contribution. What will be the exempt contribution, guys? 12% of the salary number. This is going to be your exempt contribution. So, but then listen, don't stop here. You will have one more step, step 4, where you will talk about the taxable contribution. What will the taxable contribution be now? Received minus exempt. You will see how much actually you received. You will see how much is exempt. The balance is going to be taxable under step 4. Understood? So when you talk about RPF, your first step, in case of employer's contribution, your first step will be to see the total salary for the purpose of RPF, 3 components. Then you will see how much is the amount which the employer actually contributed. Then you will calculate 12% of salary, because that is going to be your exempt contribution. Then actual contribution minus exempt contribution, the balance is going to be your taxable contribution. Perfect understanding about this part of our discussion also. Yes, so this was about the employer's contribution, guys. But tell me, what will you do with employees' contribution? My own contribution, what will you do with this? This will go to section 80C. Okay, then tell me, what about the interest on contribution? What do you do with this? Even over here, something is exempt, something is taxable. Tell me, how much is exempt? Up to 9.5% is going to be fully exempt. The balance above 9.5%, the excess above 9.5%, the excess is going to be taxable. Okay, so you will find how much is 9.5%, that is going to be exempt. The balance above 9.5%, the excess above 9.5%, that's going to be taxable. So here we have spoken about employers' contribution, employees' contribution, interest on contribution. What are we left with now? We're left with the amount withdrawn. In case you withdraw the amount, then what will be the tax treatment? That is what we're going to discuss. But we will come to that only if you're thorough till here, right? Employers' contribution up to 12% of salary is going to be exempt. Beyond 12%, the excess is going to be taxable under the head salaries. All right, then employees' contribution will go under the head 80C. Interest on contribution also up to 9.5% is going to be exempt. The balance above 9.5% is going to be taxable under the head salaries. Now listen, guys, I'm coming to the next part about RPF, the last part about RPF. What about the amount withdrawn? Listen, RPF, employer's contribution, 12% of salary is exempt, excess is taxable. Employees' contribution, 80C. Interest on contribution, 9.5% exempt, excess is taxable. Listen to the amount withdrawn. In case you withdraw any amount from RPF, you will see, did your assessee render dash years of dash service? Could you help me fill in the blanks, please? You will see, did your assessee render 5 years of continuous service? If he has rendered 5 years of continuous service, then tell me, exempt or taxable? This amount withdrawn, exempt or taxable? Then the amount will be fully exempt. Okay, but if he has not rendered 5 years of continuous service, then what would you do? If he has not rendered 5 years of continuous service, you will see, are any exceptional conditions applicable? What are the exceptional conditions? Let us say I rendered service for less than 5 years, okay? But why did I render service less than 5 years? It was a reason beyond my control. It was because of a reason beyond the employee's control. The employee, given a choice, would have continued for 5 years also. But employer itself shut down business. So what can the employee do? He has to leave. Or let us say the employee, got into some disability. The employee got disabled. Now, even if the employee wants to continue, he cannot continue. So he rendered less than 5 years of service, but because of a reason which was beyond his control, here exempt or taxable. Less than 5 years of service, but because of a reason beyond employee's control, so even here it's going to be exempt. Understood? My first exception. Then my second exception, this time also I rendered less than 5 years of continuous service, okay? But you know what happened? Let us say I was working with employer 1 for 3 years. All right, I left employer 1 and I joined employer 2. Employer 2, I worked with him for 4 years. When I left employer 1 after 3 years, I did not withdraw the money. Whatever money was there in RPF, what I did was, even employer 2 is maintaining RPF. Okay, so whatever money was there in the RPF when I left employer 1, that money got transferred into employer 2's RPF. So which means, total put together, how many years service I rendered? Total put together, I have rendered 7 years service, guys. This 7 years is at least 5 years, guys. So therefore, even here it's going to be exempt. Understood. So if I have rendered 5 years of continuous service, then it's going to be exempt. I rendered less than 5 years of continuous service, but because of a reason beyond my control, it's going to be exempt. Then I left the job with one employer. I went and joined another employer, but I did not withdraw the money here. Whatever money I had accumulated over here, I transferred to employer 2's RPF. So total put together, I have worked for 7 years, guys. Now I am withdrawing. Total put together 7 years, at least 5 years, it's going to be exempt. Then what about all other cases, guys? What if I rendered less than 5 years of service and both the exemptions are not applicable? All other cases, what will you say? All other cases, the amount which I get from RPF will be taxable. Crystal clear with this discussion now, everybody? So the amount which I withdraw from RPF will be exempt for me when? It will be exempt either if I rendered 5 years of continuous service, or it will be exempt in, these two cases, these two exceptional cases. In all other cases, the amount which I withdraw from RPF will be fully taxable. All right, now listen, I'm not going to end my discussion over here. Relating to RPF, there are some more things which you should be aware of. Listen to me carefully. See, where did it go here? Listen, some extra points relating to what? Extra points relating to RPF only. All right, my first extra point. In case the employer's contribution to three things put together, employer's contribution to RPF plus employer's contribution to superannuation fund plus employer's contribution to national pension scheme. If all the three put together is more than dash, more than how much? More than rupees 7,50,000, then what will you do, guys? You will see how much is the excess. This excess is going to be taxable as dash. This excess is going to be taxable as perquisite. Okay, then on this excess you will calculate interest, and even that interest will be taxable. Even that interest will be taxable as dash. Even that will be taxable as perquisite. I hope you are aware for this interest calculation, you have a unique method of calculation, TP1, TP2 and all of that. Yes, I'm not going into that calculation, guys, because that is pretty complicated. At the same time, not too important from the examination perspective. This is going to be my homework. I will send you a PDF explaining this separately. Okay, so I will keep this in my mind. I will remember to send you this interest part. It is not very important from the examination perspective. You have a nice complicated formula how to calculate this interest. I hope you're aware of. Then listen to the next point, guys. What about there's another special point about employees' contribution. You will look at the employees' contribution, either RPF or SPF, whatever is applicable to him out of these two. If the employee's contribution is more than rupees dash, more than how much? Employee's contribution is more than rupees 2,50,000. Very good, guys. Then what will you do? You will see how much is the excess. Okay, on this excess you will see how much interest did our assessee earn. Now what will you do with this interest? This interest is going to be taxable, and it will be taxable under which head? It will be taxable under the head salaries. The excess interest on this excess, whatever interest we are earning, that interest is going to be taxable under the head salaries. You know what the PF authorities will do, RPF, SPF authorities, you know what they will do? Like, for example, let us take a situation. Let us say I contributed 3 lakhs. Okay, the employee's contribution was 3 lakhs. Let us say my own contribution. Okay, it is more than 2,50,000. So what the PF authorities will do is that they will maintain 2 separate accounts for me. They will maintain one taxable account for me, and they will maintain one non-taxable account for me. Now, out of this 3 lakhs, 2,50,000. On this 2,50,000, nothing they should tax, guys. So that 2,50,000 they will put under the non-taxable bucket, and the balance 50,000 they will put under the taxable bucket. Okay. Now on this 50,000, whatever interest I earn, this interest will be taxable under the head salaries. On this 2,50,000, whatever interest I earn, this interest will not be taxable under any head. You got it? You got a hang of it? Yes. So this is going to be the non-taxable portion. This is going to be the taxable portion. On this 50,000, whatever interest I earn, this interest will be taxable under this new provision. But at the same time, also remember that this concept is applicable only from 21-22 onwards, which means whatever balance you had on 31st March 2021, that entire balance will go where? that entire balance will go and sit under the non-taxable bucket part. Okay, only 21-22 onwards only I will see how much is the employee's contribution. Up to 2,50,000, I'll say it is not taxable. Beyond 2,50,000, the excess alone I will put under the taxable bucket. Then only 21-22 onwards. All right, and one last thing over here, guys. What if my employer is not contributing? Only I am contributing. If we do not have employer's contribution, then this limit will become dash. This limit will become 5 lakhs. Perfect understanding, everybody. With this, we have completed our learning on RPF, URPF, SPF. Can I give you one quick revision of the entire thing? And then I will ask you three questions, and then we will close this discussion. Are you ready, guys? Come on, guys, listen. We were discussing about PF. Before this, we spoke about all the basic concepts. We spoke about employer-employee relationship. We spoke about partner salary always goes to the head, PGBP. MP, MLA salary always goes to the head, IFOS. We said if I forego salary, full 1 lakh you will tax. But if I surrender salary, only 80,000 you will tax. Name of the act, Voluntary Surrender of Salaries, Exemption from Taxation Act, 1961. Then we learned UN employee salary is going to be fully exempt. Which law? United Nations Privileges and Immunities Act, 1947. Then we learned about Section 15, the charging section. Section 15, the charging section says that you will tax salary on payment basis or due basis, whichever is earlier. Then we started learning about PF. Listen, when it comes to SPF, employer's contribution, come on, keep repeating along with me. Wherever you're sitting, keep repeating along with me. Employer's contribution, exempt. Employee's contribution, ATC. Interest, exempt. Amount withdrawn, exempt. Then URPF. URPF, year on year, no taxation. In URPF, when will taxation arise, guys? Only when I withdraw the money. At that time, you will divide the money into 4 parts. Employer's contribution, you will put it under the head salaries. Interest on employer's contribution, also you will put under the head salaries. Employee's contribution part, you will fully ignore. And finally, the interest on employee's contribution part, you will put it under the head IFOS, and it's going to be taxable. Okay, did you notice? This is going to be slightly different under IFOS and it's going to be taxable. All right, then we learned about PPF. Under PPF, we learned that year on year, PPF, there is no question of employer's contribution. There will be only my own contribution, and that will go to the head 80, that will go to section ATC deductions. In PPF, whatever interest I earn, it's going to be fully exempt under the head IFOS. And later, when I withdraw money from PPF, even that is going to be fully exempt. Then we learned that when it comes to RPF, employer's contribution up to 12% of salary will be exempt. Beyond 12%, the excess alone will be taxable. And what is the salary, guys? Salary will be nothing but basic salary plus DA forming part plus employees turnover-based commission. All right. Then after that, we learned in case of employees' contribution, I'm going to fully get a deduction under section ATC. Then we learned about interest on contribution. Up to 9.5% is going to be exempt, and above 9.5%, whatever excess I earn above 9.5%, that is going to be taxable. Okay. Then we learned in case I withdraw money from RPF, you will see, did I render 5 years continuous service? If I did render 5 years of continuous service, then it's going to be fully exempt. If I rendered less than 5 years of service, and if any of these situations exist, even then it's going to be exempt. What are the two situations, guys? Number one, less than 5 years, but because of a reason which was beyond employee's control, then it's going to be exempt. Also, less than 5 years, but I left one job and joined another employer, both having RPF. All right, even here it's going to be exempt provided put together it's at least 5 years. And then we learned if any other case apart from these two, any other case, if I rendered less than 5 years continuous service and none of these situations are applicable, then also the amount withdrawn is going to be fully taxable. Okay, then we learned about 2 extra points. These 2 extra points will apply in addition to whatever you have already done over here. Because of these 2 extra points, yes, there might be some double taxation. Like for example, you might be taxing employer's contribution here and you might end up taxing again here. Do not bother. Totally independent concept. Did you understand this, everybody? Did you listen to this part? Yes, there might be double taxation. These 2 parts you will apply independently in irrespective of the fact that you have already taxed over here, you have already taxed interest over here. You're understanding? You have already taxed interest over here. In addition to that, over and above that, you will still tax over here. There might be some double taxation. You can't help it. Now, what are the two extra points? The first extra point was, what is the employer's contribution to three things put together? RPF, superannuation fund, and NPS. Superannuation fund, not statutory provident fund. Okay. Employer's contribution to RPF plus superannuation fund plus NPS is more than 7,50,000, then you will see what is the excess. The excess will be taxable as perquisite. On this excess, whatever interest you're earning, even this interest will be taxable as perquisite. There might be double taxation. You've already taxed earlier, might get taxed again, but this is an independent concept. Then we learned employees' contribution. If that is employees' contribution to RPF or SPF, if it is more than 2,50,000, you will see what is the excess. On the excess, how much ever interest you are earning, that excess interest alone will be taxable under the head salaries. See, I am not saying the excess 50,000 will be taxable. On this excess 50,000, whatever interest you earn, that interest will be taxable under the head salaries. Crystal clear until here, everybody? I am closing this discussion on provident fund. 3 questions I'm going to ask you. Answer the 3 questions and then comfortably, confidently we will close. Tell me, interest from SPF, what will you do to this? Interest from SPF, what will your tax treatment be? Very good, guys, very good. It's going to be fully exempt. Exempt under which head? Exempt under which head? Under the head salaries. Perfect. Then tell me, what about interest from RPF? What will you do to this interest? This interest, what will you do? Up to 9.5% is going to be exempt, and whatever is the excess above 9.5%, what will you do with the excess? The excess is going to be taxable. Taxable under which head? Taxable under the head salaries. Then tell me, what about interest from PPF? What will you do to this PPF interest? This is going to be fully exempt, but exempt under which head? Fully exempt, but exempt under the head IFRS. Now understood? In addition to all these concepts, don't remember the 2 extra points. The first extra point is applicable when the employer's contribution to these 3 is more than 7,50,000. Second extra point will apply when the employee's contribution is more than 2,50,000. Okay, so with this, I am ending the discussion relating to PF for you, and I'm taking you to the next retirement benefit, which is going to be leave salary. Let us discuss about leave salary, guys. What exactly is leave salary? First of all, leave salary is nothing but you are allowed to take a certain number of days as holiday, right? And you did not take that many days as holiday. So, but then, and which means you worked for extra days. You worked for days for which it was not required for you to work. So because you worked for extra days, I will give you extra salary in the form of leave salary. Okay, now in case it is leave salary, what are you going to do? Let me discuss this with you part by part. Listen to me. The very first thing, what's going to be your first step? Your first step will be to see, did your assessee receive the leave salary during service or did he receive it upon retirement? If he received it during service, what will your answer be? During service, it doesn't even matter what kind of an employee, government employee, non-government employee, it doesn't even matter. What will you do? You will straight away say that it's going to be fully taxable. Okay, but what if you receive leave salary upon retirement? Then what will your answer be? Leave salary received upon retirement. Here you will see, is it a government employee or is it a non-government employee? For government employee, what will your tax treatment be, guys? Government employee, the tax treatment is going to be fully exempt, right? Upon retirement, fully exempt. What about non-government employee? For non-government employee, you will have to see how much is received. From that, you will have to subtract a certain amount which is exempt, and the balance alone is going to be taxable. Okay, now how do you find this exempt leave salary? To find the exempt leave salary, again, you have to follow some steps. You'll have to find 4 things, all right? And out of the 4 things, you will have to pick whichever is least. That whichever is least is going to be exempt. Now, what are the 4 things? The first thing is earned leave into average monthly salary. What is earned leave? Earned leave has many different names. You can also call it as leave to the credit of the employee. Earned leave, in essence, is nothing but how many days leave you could have taken but you did not take. So earned leave, this is the number of days for which you're getting leave salary. These are the extra days that you have worked. The number of days for which you could have taken the leave but you did not take. Earned leave into average monthly salary. Then your second thing is going to be 10 into average monthly salary. Okay, your third is going to be the maximum. Now, can you tell me what is the maximum exemption of leave salary? The maximum exemption of leave salary is 3 lakhs. All right. And then tell me, and the last point is going to be what? The actual leave salary. How much leave salary did we actually receive? Out of these 4 things, we will see whichever is the least of the 4 things, and that is going to be exempt for us. Now, how to calculate these 4 things? We will see that also. So, first of all, you will check, did you receive during service or upon retirement? If you receive during service, nothing else to check. It's going to be straight away fully taxable. If you received it upon retirement, for government employee, it's going to be fully exempt. For non-government employee, received minus exempt, balance is going to be taxable. How do you find the exempt number now? The first thing is earned leave into average monthly salary. Now listen guys, my next discussion with you is going to be how to calculate this earned leave. What we are going to do is, we are first going to look at how to calculate earned leave. Then we will see how to calculate salary. Okay, both of these are important for the calculation of leave salary. Let us talk about earned leave first. To calculate earned leave, you need some 2 to 3 things. The first thing is number of years of service. How many years did you render the service? Now, what if there is a fraction here? Like, for example, what if I rendered service for 20 years and 3 months? You will always ignore the fraction, irrespective of what the fraction is, okay? You always ignore the fraction, whether it is less than 6 months, more than 6 months, you don't care. Fraction is always ignored. You take only the completed years. Then you will see what is the rate of earned leave entitlement. Now, what do you mean by earned leave entitlement? Try to understand this. This is nothing but how many days of leave are you allowed to take every year. I'll give you an example. Let us say I worked for my employer for 20 years and 3 months. Okay. And every year I am allowed to take 32 days of leave. I am allowed to take every year. Okay. So number of years of service, what number will you take? Number of years of service, you will take 20 years, you will ignore the fraction. Then how many days leave am I allowed to take every year? That is rate of earned leave entitlement. You're understanding? Rate of earned leave entitlement is nothing but how many days of leave am I allowed to take every year? And that is how much in this example, 32 days guys. But how much am I supposed to take? This should always be restricted to 30 days. Even if it is more than 30 days, I am supposed to restrict it to 30 days. All right, then C is going to be how many days of leave I have already taken during service. How many days of leave? See, I am allowed to take 32 days of leave every year. So, see, but I'm going to consider only 30 days. So, 20 years, I am allowed to take 30 days leave every year. Totally, how many days leave am I allowed to take? 600 days leave I'm allowed to take. But let us say I have already taken leave of 200 days. Okay. And I have also encashed leave salary during service. I asked employer to give me some leave salary during service also. During service, let us say he gave me leave salary for another 100 days. During service itself, he gave me leave salary. So total 300 days. This is going to be point C. So now what is my earned leave guys? Earned leave will be A into B minus C. In simple words, earned leave is going to be how many years I worked for? 20 years. Per year, how many days leave am I allowed to take? 32. But I will restrict it to 30 days. So totally, how many days leave am I allowed to take? How many days leave am I allowed to take? I am allowed to take 600 days leave. Okay. Out of 600 days leave, how many days leave I already took? I already took 200 days leave. And how many days leave I already took leave salary? I already took leave salary for 100 days. So what is my balance earned leave now? My balance earned leave is 300 days. This is going to be my earned leave. But can I take earned leave in days? No, it has to be in months. So 300 days means how many months? 300 divided by 30. It's going to be how many months? It's going to be 10 months. Perfect understanding, guys. So earned leave, how do you calculate? A into B minus C. A is going to be number of years of service. How many years did you work for? In case there is a fraction, I will always ignore the fraction. Then B is rate of earned leave entitlement. This is the most important. Did you understand what is rate of earned leave entitlement, guys? This is nothing but how many days of leave you can take every year. How many days of leave you're allowed to take every year, and this should not be more than how much? This should not be more than 30 days. Then we learned the third element is how many days leave you already took plus how many days leave salary you already took. Leave taken, you understood. How many days you took leave during the service? 200 days leave you took during the service. Leave encashed. This might be a little tricky for some of you if you are not aware of it. Leave encashed is nothing but during the service, how much leave salary you took. It is possible, right, that you get leave salary during service. So during service, how many days leave salary you took? That is going to be leave encashed. So leave taken plus leave encashed, 300 days. So A into B minus C, this is going to be my earned leave. So for this earned leave only, I'm going to get leave salary. Then tell me, how do you calculate this average monthly salary, guys? How many components will you have over here? Even over here, you will have 3 components. And what will the 3 components be? Number 1, you will have basic salary. Number 2, you will have DA, which is forming part of salary for retirement benefits. And number 3, you will have employees turnover based commission. Okay. Now, average monthly salary, you're going to do this calculation for last how many months? Last how many months average are you going to take? Last 10 months average you're going to take. But 10 months before what? You're going to calculate 10 months before what? I'll give you 2 options. 10 months before date of retirement or 10 months before month of retirement. You're supposed to see 10 months before the date of retirement. You're understanding? You will see what is the date of retirement. Before that, you will see the last 10 months period. For that 10 months period, you will find the salary and you will find the average. Got it? So this is how you do your leave salary calculation. All right. You will see the date of retirement, and before the date of retirement, you will calculate 10 months. All right. So under leave salary, you will first of all check when are you receiving leave salary. If you're receiving leave salary during service, then your answer will be taxable irrespective of what kind of an employee your assessee is. But if your assessee is receiving leave salary upon retirement, please remember for government employee, it's going to be fully exempt. Okay. For non-government employee, only drama. You calculate 4 things. Out of the 4 things, whichever is the least is going to be exempt. What are the 4 things, guys? Number 1, earned leave into average monthly salary. Number 2, 10 into average monthly salary. Number 3, maximum exemption, you will get 3 lakhs. And number 4, actual leave salary. How do you calculate earned leave? You will first see how many years your employee worked for. Then you will see each year how many days leave is allowed, which you will restrict to 30 days. Then you will see during service, how many days leave did your assessee already take? He took 200 days leave already. During service, how many days leave he encashed? He encashed 100 days leave. During service itself, how many days leave taken plus how many days leave encashed? Both of this during service. So A into B minus C, the balance is going to be your earned leave. Please do not forget to convert it into months. Then we spoke about average monthly salary. You will look at last 10 months average. 10 months average before the date of retirement. What will be the components? Basic, DA forming part plus employees turnover based commission. Like for example, let us say the date of retirement was 25th December 2022. Okay, then tell me what's the period for which you will find the salary? Last 10 months before this date. That's going to be what? 25th November, 25th October, 25th September, 25th August, 25th July, 25th June, 25th May, 25th April, 25th March, and 25th February. So what will this period be? This period will be 25th February 2022 to 24th December 2022. For this period, you will find the salary. Now, did you understand, everybody? All those of you who had a doubt regarding the date of retirement calculation, Nihal and Annapurni, are we clear? Yes, you will see what is the date of retirement, and before that you will calculate 10 months. So now if you calculate and see March, April, May, June, July, August, September, October, November, December, it's going to be 10 months. So this is the 10 months period for which you're going to calculate the salary. All right. And what are the components of the salary? Basic, DA forming part, and employees turnover based commission. Last 10 months average before the date of retirement. Okay, guys, so this was our second retirement benefits, talking about leave salary. All right, now I'm taking you to the next retirement benefit, which is gratuity. Listen to me. How do you handle gratuity? Even over here, you will first of all check that when did you receive the gratuity. In case you received gratuity during service, it doesn't matter what kind of an employee you are, it's going to be fully taxable, guys. Okay, but in case you receive gratuity upon retirement, here you're going to check again, is your assessee a government employee or is your assessee a non-government employee? If your assessee is a government employee and if he has received gratuity upon retirement, you know very well it's going to be fully exempt. But if your assessee is receiving gratuity upon retirement and if he's a non-government employee, then you will have to again see the same thing. How much is received from that, how much is exempt, and the balance is going to be taxable. Okay, so in case you are receiving gratuity during service, it's going to be taxable for all your employees. Upon retirement, for government employee, it's going to be fully exempt. For non-government employees, received minus exempt, balance is taxable. Now listen, guys, how do you calculate the exempt gratuity? To calculate the exempt gratuity, first of all, you will have to see what kind of an employee is your assessee. Is your assessee covered by Payment of Gratuity Act or is he not covered by Payment of Gratuity Act? Okay, now if he's covered by Payment of Gratuity Act, then you will calculate three things. Out of the three things, you will pick whichever is least, and that's going to be your exempt gratuity. Okay, now what are the three things? The first thing, covered by POGA, first thing, 15 by 26 into last drawn salary into number of completed years of service. Okay, number two, what's the maximum exemption you can get? Maximum gratuity exemption, maximum 20 lakh exemption you can get. And number three will be the actual gratuity. How much gratuity did your assessee actually receive? Okay. Out of the three, you will find whichever is least, and that is going to be your exempt gratuity. Now, 15 by 26 into last drawn salary. What is last drawn salary? How many components can you tell me, please? We will have, very good Atulya, we will have only two components. Number one, we will have basic salary, and number two, we will have DA. Will we differentiate over here forming part, not forming part? Will we differentiate over here? No, here we will consider all DA. Okay, then number of completed years, how will you calculate this? What will you do with the fraction? Tell me, if the fraction is, let us say, I'll give you some situations. What if it is 10 years, 3 months? You will round off into how many years? 10 years. What if it is 10 years, 6 months? You'll round off into how many years? 10 years, 6 months. Even this you will round off to 10 years. Only if it is more than 6 months, 10 years, 8 months, then you will round off to 11 months. So number of completed years of service, you will bother about the fraction. If the fraction is up to 6 months, you ignore. If the fraction is more than 6 months, you round off to the next year. Okay, maximum exemption 20 lakhs, actual gratuity, whichever is least is going to be exempt. But guys, what if my assessee is not covered by POGA? Even over here, you have to calculate three things. Even over here, you will have to pick whichever is lesser, and that is going to be exempt or taxable. That's going to be exempt. But what are the three things? The first thing is going to be 1 by 2 into average monthly salary into number of completed years. Now here, tell me, how will you calculate this average monthly salary? How will you calculate? How many components? Here you will have three components: basic salary plus DA forming part plus employees turnover based commission. Okay, and last, how many months average you will find? Even over here, you will find last 10 months average, but 10 months before what? 10 months before the month of retirement. Here we saw 10 months before date of retirement in leave salary. See, even in leave salary, you find 10 months average. Even in gratuity, you find 10 months average. But in leave salary, you find 10 months before date of retirement. In gratuity, you will find 10 months before the month of retirement. Now, how will that change? Same example, okay. Even over here, we had taken 25th December, right? Same example, let us see how it will differ. Let us say the date of retirement was same 25th December 2022. Now tell me, what is a month of retirement? The month of retirement is December. Ignore December. See last 10 months. What will be 10 months if I ignore December? It's going to be February to November, guys. Feb, March, April, May, June, July, August, September, October, November, Feb to November. So here it's going to be 1st February 2022 to 30th November 2022. Did you notice it's making a small difference? When I say 10 months before the date of retirement, it was this. And when I say 10 months before the month of retirement, I ignore the month of retirement, and before the month of retirement, I'll calculate 10 months. Okay, so this was your average monthly salary. And guys, how will you calculate number of completed years? What will you do with the fraction here? Here you will fully ignore fraction. Less than 6 months, more than 6 months, I don't care. You will fully ignore the fraction. Okay, then here tell me what's going to be the maximum exemption. How much maximum exemption you can get? Maximum 20 lakhs exemption you can get. And what's going to be the third component? The actual gratuity. So you have three things. Out of the three things, you will pick whichever is least, and that's going to be your exempt gratuity. All right. So again, once again, guys, one last time, can we revise this? You sort of understood. Yes, you must have already learned all of this. I'm just trying to give you a revision of this entire thing in a short span of time so that you get done with this chapter as well as possible, as quick as possible. So here we saw that what if I'm receiving gratuity during service? During service, irrespective of what kind of an employee, it's always going to be fully taxable. Okay, but what if I'm getting a gratuity upon retirement? If I get the gratuity upon retirement, then you will see, am I a government employee or am I a non-government employee? If I'm a government employee, it's going to be fully exempt. If I'm a non-government employee, you will have to see how much I received, how much is exempt, balance will be taxable. Now, how much is taxable will depend upon, am I covered by POGA or not covered by POGA. If I am covered by POGA, then 15 by 26 into last run salary into number of completed years of service. When I say last run salary, I consider basic plus DA, forming part, not forming part and all, I don't care. Number of completed years of service, up to 6 months, you will ignore the fraction, and more than 6 months, you will round off to the next number. Okay, then we learned the second point. What's the maximum exemption? The maximum exemption is going to be 20 lakhs. If you noticed, whether covered by POGA, whether not covered by POGA, second and third point are the same. But what if he is not covered by POGA? Here we said 1 by 2 into average monthly salary into number of completed years. Average monthly salary, how to compute? Did you understand? This is going to be 3 components: basic plus DA forming part plus employees turnover based commission. And here you will look at how many months calculation will you do? You will do calculation for the last 10 months. Last 10 months before what? Last 10 months before the month of retirement. Please do not forget, in leave salary also you calculate last 10 months salary. Even in gratuity, if your assessee is not covered by POGA, even here you calculate 10 months salary. 10 months average here also, 10 months average here also. But what is the difference? Here you will calculate 10 months before the date of retirement, and here you will calculate 10 months before the month of retirement. Can I close gratuity also? Yes. Are you confident till here? Everybody, please give me a quick confirmation. Till here, did we understand properly? We have revised 3 retirement benefits. We have revised PF, we have revised leave salary, and now we have revised gratuity. Let us go to the next retirement benefit now, concept number 9. We're going to be discussing about pension. Okay, pension, we will go point by point. Now listen, in case my employee died, and after his death, if his family is receiving pension, which head will this go to? Family pension will go to the head IFOS, right? And under IFOS, what do you do, guys? How much is exempt? Tell me. How much is exempt? Either 15,000 rupees or 1/3 of the pension received, whichever is lesser is going to be exempt, and the balance is going to be taxable. 15,000 or 1/3 of what is received is going to be exempt, balance is going to be taxable. But what if my employee has retired, and after his retirement the employee himself is getting pension? Now this pension will go to which head, guys? This pension will come to the head salaries, and this is what I am talking about right now. Okay, if he died and if his family is getting the pension, that will become family pension, that will go to IFOS, and under IFOS 15,000 or 1/3 of whatever you received, whichever is lesser, is going to be exempt. But in case your employee retired and he himself is receiving pension, then it will go under the head salaries. Now here, what will you check? This pension, you will first of all see, is your employee a government employee or is your employee not a government employee? If he is a government employee, you will see, is it uncommuted pension or is it commuted pension? What is uncommuted pension, guys? Periodically. Commuted means what? Lump sum. If it is uncommuted pension, it's going to be fully taxable. Government employees still fully taxable. Am I right? Yes, it's going to be fully taxable. Uncommuted pension will be fully taxable. But what about commuted pension, guys? Government employee commuted pension will be fully exempt. Okay. Now, what if my assessee is a non-government employee? Again, you will check the same thing. Again, you will check how much is uncommuted, how much is commuted. Now, listen, if it is uncommuted pension, I don't care what kind of employee. Government employee also taxable, non-government employee also taxable. So, can I conclude that uncommuted pension is always taxable? Do you agree with me? Uncommuted pension will always be taxable. Okay. Commuted pension for government employees is exempt. What about non-government employees? For non-government employee, you will have to see, does your assessee, does your employee also receive gratuity or is he not receiving gratuity? If he is already receiving gratuity, then you tell me dash of dash pension is dash. Help me fill in the blanks. If he is receiving gratuity, then how much will you calculate? If he is receiving gratuity, 1/3. 1/3 of what? Keyword. 1/3 of full pension is what? Exempt or taxable? 1/3 of full pension will be exempt or taxable. Very common mistake in the examination. Exempt. 1/3 of full pension is exempt. you notice whether you talk about leave salary, we calculate it exempt first, then taxable. Even in gratuity, we calculate it exempt first, then taxable. Even in pension, we will calculate exempt first. So you tell me what will be taxable then? If this is exempt, what will be taxable? Received minus exempt, balance will be taxable. Okay, no, you cannot say 2/3. That is a mistake I'm telling you. You cannot say balance 2/3 will be taxable. You will see how much is received. Out of this number, exempt, balance is taxable. I'll show you examples, you'll understand. Then what if my assessee is not getting gratuity, guys? If he's not getting gratuity, then half of full pension is going to be what? Again, same thing. Half of full pension is exempt. So what will be taxable, guys? Same thing, received minus exempt, balance is going to be taxable. Okay, so listen, one quick revision and then I'll start giving you the examples. First of all, you will see when did my assessee get this pension? If the assessee died and after his death, if his family is getting pension, it becomes family pension. And family pension will go under the head IFOS, and under IFOS, it's going to be taxable. But you will get some exemption also. How much exemption? 15,000 or 1/3 of whatever pension the family has received, whichever is lesser. That will be the exemption, balance will be taxable. But if the employee has retired and if the employee himself is receiving the pension, then that pension is going to go under the head salaries. If he's a government employee or if he's a non-government employee, uncommuted pension will always be taxable. But if it is commuted pension received by government employee, exempt. If it is received by non-government employee, what will you check? Is my assessee also getting gratuity or is he not getting gratuity? If he is getting gratuity, then 1/3 of full pension will be exempt and received minus exempt, balance will be taxable. If he is not getting gratuity, then 1/2 of full pension will be exempt and the balance received minus exempt, balance will be taxable. All right, now listen guys, I'm going to give you some examples. Please take it as a challenge that you have to understand it in the first instance itself. What I've taught you over here, this I'm going to try to explain to you better through an example. Let us say the date of retirement of my assessee was 1st of January 2020. Okay, and Jan onwards, he was getting pension. He was getting 5,000 rupees per month pension. Guys, can I call this as uncommuted pension? It is periodical, no? So I'll call it uncommuted pension. Then on 1st March 2020, he got 1 lakh rupees as commuted pension, lump sum pension. He got 1 lakh rupees. And this 1 lakh was 60% of the full pension. And let me also give you some more information. Let us say your assessee is also receiving gratuity and your assessee is a non-government employee. Okay, now what will the tax treatment be? First of all, I'm going to be discussing with you about commuted pension. Then we will go to uncommuted pension. Okay, now listen, in commuted pension, what is the first thing that you will check, guys? You tell me. Very good, perfect. First thing you will check, is your assessee a government employee or a non-government employee? Assessee is a non-government employee. Okay, then what's the next thing you will check? After non-government employee, is he getting gratuity or not? Yes, he is getting gratuity. So therefore, what will your answer be, guys? Your answer will be, how much is exempt? 1/3 of what? 1/3 of full pension. 1/3 of full pension is what? Exempt or taxable? 1/3 of full pension is exempt. So to calculate 1/3 of full pension, I need full pension first. Yes. So what will the full pension be? Listen, this 1 lakh rupees I got, this was only 60%, guys. Now full pension means what percentage? This 1 lakh is only 60%, but I want full pension. Full pension means what percentage? 100%. 100% will be how much? So full pension will be 1 lakh into 100 by 60, which is going to be 1,66,667. Okay, now tell me, how much will my exempt pension be, guys? My exempt pension will be 1/3 of this full pension number. So what is 1/3 of this full pension number? 55,556. This is going to be exempt. Now listen, what did I tell you? What is taxable pension? I told you, don't say balance 2/3. Balance 2/3 means how much will you end up telling me? Balance 2/3 means you will tell me 1,11,011 right? But that is not going to be the correct answer. How to calculate taxable pension? Received minus exempt. Tell me how much he received. He received 1 lakh. How much is exempt? 55,556 is exempt. So what is going to be taxable? 1 lakh minus 55,556, 44,444. This is going to be my taxable pension. Now did you all understand? Now did you understand why I was stressing so much on this? Yes, you do not say balance to a third is taxable. Received minus exempt is taxable. Okay, now come on guys, let us handle the uncommuted part. This part I'm sure if you've listened attentively, you would have understood. Come to the uncommuted part. Now listen, uncommuted periodically in the month of Jan, how much pension he would have gotten? 5,000 rupees he would have received. In the month of February also, 5,000 rupees he would have received. But listen guys, in the month of March, he got commuted pension. Situation will change now. See, earlier I'm talking about Jan and Feb. Okay, earlier tell me how much was commuted. In Jan Feb, how much was commuted? Nothing was commuted, right? So entire 100% was uncommuted. When entire 100% was uncommuted, how much uncommuted pension we were getting? We were getting 5,000 per month uncommuted pension. But in the month of March, how much we got commuted? In the month of March, 60% we got commuted, guys. So how much are we left with? How much uncommuted are we left with? Only the balance 40%. Now listen, 100 when 100% was uncommuted, I was getting 5,000. If 40% is uncommuted, how much will I get? In the month of March, how much will I get? 5,000 into 40 by 100, I will get only 2,000. So what is my uncommuted pension now totally? 12,000, and this is going to be fully taxable. You understood? Earlier, 100% was uncommuted, guys. I was getting 5,000. Now I commuted 40%. I commuted 60%. So only balance 40% is uncommuted. That is going to be how much? Cross multiply 2,000. Perfect understanding. Yes, so this was our discussion regarding pension discussion. So under pension, we've spoken about commuted and uncommuted. Remember, in commuted pension, 1/3 of full pension is exempt. So what is taxable? Not balance 2/3. What is taxable? Received minus exempt. If no gratuity, then half of full pension is exempt. Received minus exempt is taxable. I'll pause for a moment. Just quickly run through this slide once. I hope we are done. Can I proceed? Can I take you to the next discussion? Yes, so this was our discussion regarding pension. Now, before I start off with the allowances for you, one more small discussion I want to have with you, and that is going to be about voluntary retirement scheme. Okay, in case of voluntary retirement scheme, you're going to again see the same thing. You will see how much your employee received, out of which how much is exempt, and the balance is going to be taxable. Okay, even over here to calculate the exempt amount, you will have to calculate 3 things. Out of the 3 things, you will have to pick whichever is lesser, and that whichever is lesser will be exempt. Now, how do you calculate this? What are the 3 things you will calculate? Number 1 will be the actual compensation. How much voluntary retirement compensation did your assessee actually get? Then tell me what's the maximum exemption you can get for VRS. Maximum exemption is 5 lakhs. See, remember, for gratuity maximum 20 lakhs. For leave salary maximum 3 lakhs. For VRS maximum 5 lakhs. Okay. In number 3, you will calculate 2 things. First of all, you will calculate last tranche salary into 3 into completed years. Last drawn salary into 3 into completed years. Then you will calculate last drawn salary into pending months. What do you mean by pending months? Let us say he was supposed to retire only after 5 years. Only 2 years over. 3 years are still left. So for 3 years, that 3 years will become your pending months. 3 years into 12, 36 months. That's going to become your pending months. This is nothing but what was the remaining period of service. You were supposed to work for me for another 5 months. Now itself you're retiring. So what's the pending service? How much months of service is still pending? 5 months. That's going to become the pending months. So last drawn salary into 3 into completed years. Last drawn salary into pending months. Out of these two numbers, you will pick whichever is higher. Okay, that's going to be a third point. So first, second, third, out of these three, whichever is lesser is going to be exempt. Now, can you tell me how will you calculate last drawn salary? How many components in last drawn salary? You will have totally 3 components, guys. Number 1, you will have basic salary. Number 2, you will have DA forming part. And number 3, you will have employees turnover based commission. Okay. Then can you tell me how will you calculate these completed years? What if you have any fraction? What will you do with this fraction? I'm going to wait for your answer. What will you do with the fraction? Very good, guys. Very good, Kartika. You will ignore the fraction. Okay, so in voluntary retirement scheme, you will calculate 3 things, and out of the 3 things, whichever is least will be exempt. Received minus exempt, the balance is going to be taxable. What are the 3 things? Number 1, actual compensation. Number 2, maximum exemption, 5 lakhs. Number 3, you will calculate 2 things. Out of these 2 things, you will pick whichever is higher. What are the 2 things? Last drawn salary into 3 into completed years. Last drawn salary into pending months. Out of these 2 numbers, whichever is higher, you will pick, and that's going to become your third number. Out of these 3, whichever is least is going to be exempt. Received minus exempt, the balance is going to be taxable. Okay, so this was our discussion regarding VRS, guys. With this, we are done learning with all our retirement benefits, and now I'm going to start discussing with you the allowances. Are you ready till here? Are you having some confidence? I hope it's making some difference to your preparation. At least a teeny bit of difference. If it's making, then that itself is mission accomplished. Yes, guys, we're done with the basic concepts. We're done with all the retirement benefits. We're done with gratuity, leave salary, pension, and PF. Okay, now let's go to the allowances. Under the allowances, our very first discussion is going to be about house rent allowance. Okay, in house rent allowance, what are the steps that you're going to follow? You will first of all check, is your assessee having rent expense? Guys, only if he has rent expense, you will give him exemption, right? If he is not having rent exemption, then will you have any exemption? No, only if he pays rent, only then I will give him exemption. If he's not paying rent, then no exemption itself. So you check this first, that is he having rent expense or not, because only if he's having rent expense, you will go to the second step. Okay, now you tell me, according to you, in HRA, what's the next thing that you should calculate? We need salary for the purpose of HRA, guys. And the salary will be how many components? Very good. 3 components. What are the 3 components? Number 1, basic salary. Number 2, DA, which is forming part of salary for retirement benefits. And number 3, employees turnover based commission. Okay. So what are the 3 components? One last time, basic salary plus DA forming part plus employees turnover based commission. Now tell me, the same 3 things, where else have we seen? The same 3 things we have also seen in leave salary. We have also seen in gratuity not covered by POGA, and we have also seen in RPF, employers contribution, right? Where we didn't see this. Even in VRS, it was the same thing. Where we did not see this, gratuity covered by POGA. In gratuity covered by POGA, we took only basic salary plus DA. Only 2 components we took. Okay, so this is going to be salary for the purpose of HRA. Okay, then what will you calculate? You will calculate exempt HRA. Okay, to calculate exempt HRA, you will calculate 3 things. Out of the 3 things, whichever is least will be exempt. Okay, so obviously, then what will your last step be? Your taxable HRA. And what will taxable HRA be? As usual, guys, received minus exempt, balance is taxable. Okay, now what are the three things that you will calculate? The first thing that you're going to look at, it will depend upon, is my assessee living in a metro or not living in a metro. If he's living in a metro, you will take 50% of salary. If he is not living in a metro, you will consider 40% of salary. So 50% of salary you will take if he is living in a metro city, and 40% of salary you will take if he is not living in metro city. Now, can you tell me what are the metro cities? Start listing down the metro cities. Come on, tell me. Chennai, okay. Then Delhi, okay. Then Mumbai, okay. Then Kolkata, okay. Then Bangalore, Hyderabad, Ahmedabad. No, you will stop with these three. Only Chennai, Delhi, Mumbai, Kolkata, only 4 metros. If your assessee lives in a metro city, then 50% of salary, otherwise 40% of salary. Okay, then tell me what's going to be the second component. You will see the actual HRA, how much HRA did your assessee actually receive. And the third component will be rent paid minus 10% of salary. So out of the three things, you will find whichever is least, that is going to be exempt, and received minus exempt, the balance is going to be taxable. So this was a very simple discussion on HRA, our first allowance. You will get HRA exemption only if your assessee has rent expense. Only then your assessee will have exemption. If your assessee is not having rent expense, then he will not have any exemption. Now, you will calculate salary first, which is going to be 3 components. Then you're going to be considering exempt HRA. Exempt HRA will be 3 things, whichever is least. 50% of salary if metro, 40% if not a metro. Then actual HRA received, then rent paid minus 10% of salary. Whichever is least will be exempt, received minus exempt, the balance is going to be taxable. Okay, then talking about other small allowances, what about tribal area allowance? Tell me, what about tribal area allowance, which is also called as scheduled area allowance? How much is going to be exempt? How much is going to be exempt? Rupees 200 per month is going to be exempt. And what about the how much is going to be taxable then? Received minus exempt, the balance is going to be taxable. Okay, so 200 per month is going to be exempt, received minus exempt, balance is going to be taxable. Then what about children education allowance? How much is going to be exempt here? Children education allowance, 100 rupees per month per child is going to be exempt, but maximum for how many children? Maximum for 2 children. And what's going to be taxable? Received minus exempt, the balance is going to be taxable. Then talking about children hostel allowance, here how much is going to be taxable, guys? Children hostel allowance, how much is going to be exempt? 300 rupees per month per child is going to be exempt, but maximum I'm going to cover only 2 children. And even over here, how much will be taxable? Received minus exempt, the balance is going to be taxable. Okay, then what about transport allowance? Transport allowance, how much is going to be exempt? Depends upon what kind of an employee is my employee. If my employee happens to be blind, deaf, or dumb, or orthopedically handicapped, then 3,200 rupees per month is going to be exempt. All other employees, nothing is going to be exempt. Again, over here, what's going to be taxable? Received minus exempt, the balance is going to be taxable. Then talking about the next allowance, what if my employee is somebody who is working in the transport sector and he is getting some allowance to help him meet day-to-day expenses? Then what do? You understood the question? My assessee is an employee who is working in the transport sector. For example, he's a pilot, or let us say he's a truck driver, and he's getting some allowance to help him meet day-to-day expenses. In that case, you will take 10,000 rupees per month. You will compare it with 70% of the allowance which you received. Out of these two numbers, whichever is lesser will be what? Exempt. So what will be taxable? Received minus exempt, the balance will be taxable. Okay, so when you talk about tribal area allowance, see, our first allowance we learnt about was house rent allowance, HRA. Here you will calculate 3 things. Least of the 3 will be exempt. Then tribal area allowance, 200 rupees per month exempt. Children education allowance, 100 per month per child exempt, maximum 2 children. Children hostel allowance, 300 per month per child exempt, maximum 2 children. Transport allowance, it depends. If my employee is blind, deaf, dumb, or orthopedically handicapped, 3,200 per month exempt. All other employees, nothing is exempt. Then, if my employee is working in the transport sector and if he is getting some allowance to help him meet his day-to-day expenses, 10,000 per month or 70% of allowance, whichever is lesser, is going to be exempt and the balance is going to be taxable. In all of them, received minus exempt, the balance is going to be taxable. Okay, then you have some more allowances. You have 2 T's. Connected to the 2 T's, you have a C, then you have D. How are you? Totally 7 allowances I'm talking to you about. 2 T's. Connected to the 2 T's, you have a C, then you have D. How are you? In all of these 7 allowances, what is going to be exempt? How much ever you have incurred for official purposes, whatever official expense you have incurred is going to be exempt. So obviously, guys, what is going to be taxable then? Received minus exempt, the balance is going to be taxable. Now, what are these allowances? T stands for transfer allowance. Another T stands for traveling allowance. C stands for conveyance allowance. D stands for daily allowance. H stands for helper allowance. R stands for research allowance. And U stands for uniform allowance. Okay, so for these allowances, there is no fixed amount. Whatever your assessee incurs for official purposes will be exempt. Received minus exempt, balance is going to be taxable. This would be my 7th category. Apart from this, any other allowance that you come across which we haven't spoken about, if you come across any other allowance which we haven't spoken about, like medical allowance, lunch allowance, telephone allowance, mobile allowance, medical allowance, any other allowance you come across which we haven't spoken about, exempt is nothing. All other allowances will be fully taxable. All right. So first of all, we learned about HRA, guys. Listen to me. HRA, number 1 is going to be, you're going to calculate 3 things. Number 1, you're going to calculate 50% of salary or 40% of salary, depends upon whether he lives in a metro or non-metro. Actual HRA, rent paid minus 10% of salary. Out of these 3 things, whichever is least is going to be exempt. Then tribal area allowance, what's a number that flashes across your mind? 200 per month. Children education allowance, what's a number? 100 per month per child, maximum 2 children. Children hostel allowance, 300 per month per child, maximum 2 children. Transport allowance depends. If your employee is blind, deaf, dumb, or orthopedically handicapped, 3,200 per month is going to be exempt. All other employees, nothing is going to be exempt. If your employee is in the transport sector, and if he's being paid allowance to help him meet his day-to-day expenses, 10,000 per month or 70% of allowance, whichever is lesser, will be exempt for him. 10,000 per month or 70% of allowance, whichever is lesser, is going to be exempt for him. Then we learned about some more allowances. We spoke about transfer allowance, traveling allowance, conveyance allowance, daily allowance, helper allowance, research allowance, uniform allowance. These allowances, whatever we have incurred for official purposes, that is going to be exempt, and received minus exempt, the balance is going to be taxable. All right, and then we learned any other allowance is going to be fully taxable. Now listen to me. I want you guys to have some clarity. When I say transport allowance, what am I talking about? Transport allowance is the allowance which helps you meet the cost of traveling from home to office and back. Okay, whoever is scribbling on the screen, please stop doing it. So transport allowance is nothing but the allowance which helps you meet the expenditure of traveling from home to office and back. Then this you understood. This is a totally different case where pilot, driver, air hostess, all of these employees who are working in the transport sector to help them meet day-to-day expenses. Then when I talk about traveling allowance, here what are we talking about? See, in traveling allowance, sometimes the employer asks you to go to a different city altogether. Like the employer is sending you to, let us say, Delhi to attend some conference and come. So for official purpose, he's asking you to travel to some other city and come. There it's going to be traveling allowance to help you meet that expenditure. Conveyance allowance is something which the employer gives you generally for travel within the city. Like let us say from client office, you have to go to the client office, or let us say from your office, you have to go to the income tax department to file some papers and come, or from your office, you have to go to the post office to post some document and come. So for official purposes within the city, when you're going from one place to another, that is conveyance allowance. For official purposes, if the employer is asking you to go to another city altogether to attend some conference and come, or to go do some research and come, that's going to be traveling allowance. And then transport allowance is just to meet home to office and office to home, just to meet that expenditure. Okay, now I want to give you a little more clarity about children education allowance and children hostel allowance. This part you understood, guys? Are you feeling a little better about these three? Nihal, are we clear? Yes, transport, traveling, conveyance. Now listen, let me take you to the next part. I want to give you some more clarity on children education allowance. 4 examples I want to give you. Okay, in my first example, employer is giving children education allowance to employee, and employee has no children. Now, what will you do with this children education allowance? It's going to be fully taxable. Right? Then listen to my second example. In my second example, again, my employer is giving children education allowance to the employee. Okay, the employee does have 2 children, but these 2 children, they don't go to school. Now, what will your answer be? This children education allowance, this is again going to be fully taxable. Then listen to my third example. In the third example, my employer is again giving children education allowance to my employee. See, my employee does have 2 children, but the two children are going to school, but they're going to school in USA. Now tell me, this children education allowance, what will you do? This is special. Even this is going to be fully taxable. The same thing will apply even to children hostel allowance. Let us say children education allowance, children hostel allowance, he is giving both, okay? And your assessee is having children, and those children are going to school, but the school is in US, foreign school. Again, it's going to be fully taxable. And you know one more thing, in the examination, they may use the word combined allowance. Don't get confused. What is combined allowance? Nothing but children education and children hostel allowance put together. It's both put together, you will call it as combined allowance. And now listen to my last example. In my last example, my employer is giving children education allowance, children hostel allowance to an employee, okay? And this employee is having 2 children. All right, and these 2 children are going to school, and they are going to school where? In India. Now, what will you do? For children education allowance, you will give 100 rupees per month per child exemption, but maximum only for 2 children. For children hostel allowance, how much exemption you will give? You will give 300 rupees per month per child exemption. But even here, for both of them, you will give exemption only for maximum 2 children. I think this was a very good learning for some of you, especially these 3 things. It must have given you a different perspective altogether, right? If my assessee is having no children, fully taxable. He is having children and they don't go to school, fully taxable. They go to school, but they go to school outside India, fully taxable. Only if they go to school in India, only then you give exemption. Okay, guys, then listen, I'm taking you to the next allowance. What if my assessee gets entertainment allowance? Here, what will you do? Entertainment allowance, totally 2 steps, guys. First of all, it's going to be fully taxable. For any employee, it will first be fully taxable. Then, if your employee is a government employee, only then you will give Section 16 deduction. And how will you calculate Section 16 deduction? You will calculate 3 things. Out of the 3 things, whichever is Whichever is lesser is going to be your section 16 deduction. Now, what are these three things? Number one, what's a maximum exemption you can get every year? Maximum deduction 5,000. Okay. Then 20% of basic salary. Here I don't consider the commission and all that, only basic salary. And then number three, it's going to be entertainment. How much entertainment allowance have you actually received? Out of the three things, you will pick whichever is the least, and that's going to be your deduction. But this deduction is only for government employee. So first of all, the entertainment allowance will be fully taxable irrespective of what kind of employee. Then if government employee, you will give section 16 deduction, which is going to be 5,000 rupees or 20% of basic salary, or how much ever you have received, whichever is lesser. All right. So with this, we have revised all our allowances one by one. Can we proceed forward and learn our perquisites one by one now? Yes, guys, come on, let us get to work. Let us run through all the perquisites one by one. I'll start off with the most interesting perquisite, which is RFA. Let us talk about RFA. For RFA, rent-free accommodation, I'll give you a detailed flow chart, okay? Listen to me carefully, sit up straight and listen to me. I know your brain is slowly getting tired, but you're not going to leave already. You're going to put in the effort. You're going to show some determination, okay? You're going to show that this is important for you, and you're going to stay and you're going to try to listen. Wake up that brain of yours, sit up straight, no background music in your mind, and listen to me with 100% focus. Are you ready, guys? Come on, guys, let us do this. Rent-free accommodation, the first thing that you will check will be, is your employee a government employee, or is your employee not a government employee? If he is a government employee, then which number will you pick? Then you will pick the license fee number, and this license fee number is going to be fully taxable. Okay. If he is not a government employee, then what do you do? Here it depends. If he is not a government employee, you will see, is the house owned by the employer, or has the employer himself taken it on lease, or is it taken on lease by employer? If the house is owned by the employer, then you will look at the population of that place. Now, population as per which census will you take? You will take population as per 2001 census. All right. Even though this is supposed to be a revision session, I am trying to give you every single, even minor points I'm trying to tell you guys, so that absolute revision happens. All right. So do not be boggled if I have to extend by a few minutes. I might definitely have to extend by a few minutes. The thing is, I just want to give you guys 100% revision. If you're spending time, we might as well do it properly, and we might as well do all the concepts. I don't want to skip even smaller concepts. Okay, smaller concepts like all this, I want to give you a revision so that you feel like 100% revision over straight away. You can open before exam. Okay, so listen, you'll have to look at the population as per 2001 census. Now here you will see what is the population. If it is up to 10 lakhs, then what will you do? Up to 10 lakhs, you will take 7.5% of salary. Now 7.5% of salary is going to be what? Exempt or taxable. All this while, we always calculated exempt first. PF, gratuity, leave salary, pension. Did you notice? Even allowances, we always calculated what first? Exempt. Received minus exempt, taxable. That is what we said. But in perquisites, what do? Perquisites, you straight away calculate the taxable number. So 7.5% of salary will be taxable. Okay. Then what is the population is more than 10 lakhs, but up to 25 lakhs? Then you will take 10% of salary. Okay, and what if it is more than 25 lakhs? Then you will take 15% of salary. Now 7.5% of salary, 10% of salary, 15% of salary, all of these are taxable numbers. All right, now I am saying salary everywhere over here, but what do you mean by salary? Salary under RFA is totally different, right, guys? Tell me, what are the components of salary? You have several components of salary. Number one, you will take basic salary. Then you will take DA, which is forming part. Then tell me, will you take just turnover-based commission? Or will you take fixed commission also? You will take all commission, whether turnover based, whether not turnover based, I don't care. You will take all commission. Then you will also consider bonus. Okay. And then you will also consider fees. And then you will also consider all the taxable allowances. So that's the meaning of salary. Totally, you will have 6 components, guys. Basic salary, DA forming part, all commission, bonus, fees, and taxable allowances. This is going to be salary for the purpose of RFA. All right. But what if the house is taken on lease by the employer? Then what will you do? Does it depend upon population? No. You will straight away calculate 2 things. Number 1, you will calculate 15% of salary. Will this 15% change according to change in population? No. 15% of salary, or lease rent. Lease rent paid by whom? Lease rent paid by employer. Out of these 2 numbers, you will pick whichever is, you tell me, whichever is lesser. Very good. Whichever is lesser is exempt or taxable. This is perquisite. I straight away calculate the taxable number. All right. Now, by doing all of this, you will get the value of unfurnished RFA. Okay. In case even furniture is provided, you will add the value of furnishings. All right. Now, what will the value of furnishings be? It depends upon, has the employer taken the furniture on hire, or does the employer own the furniture? If he has taken the furniture on hire, you will simply add the hire charges. If the employer owns the furniture, then you will take 10% of the cost of the furniture. So this will be your taxable value of furnished RFA. Okay. Now, sometimes what happens is my employer also charges from the employee a small amount of rent. So you will subtract that. Any rent which the employee is paying to the employer, you will subtract that. Why? Because employee is paying that amount. To that extent, he's not enjoying a benefit. He's paying for that benefit. So to that extent, you will subtract. The balance will be called what? Now, if the employee is paying rent to employer, you can't call it rent-free accommodation anymore. It is not rent-free anymore because employee is paying some rent. So now what will you call it? You will call it as accommodation at concessional rent. Perfect understanding, everybody? Yes, so this was our discussion on RFA. You will first see whether your employee is a government employee or a non-government employee. If he's a government employee, life is simple. Government employee, you will simply say license fee is going to be taxable. If he's a non-government employee, then you will see whether the house is owned by the employer or has the employer himself taken it on lease. If the employer owns the house, it will depend upon the population of the place. If he doesn't own the house, you don't care about the population. Straight away, you take 15% of salary or lease rent paid by employer, whichever is lesser is taxable. Then we learned after all of this that what do you mean by salary? 6 components: basic, DA forming part, all commission, bonus, fees, and taxable allowances. This will give us a value of unfurnished RFA. To this, we will add the value of furniture, which will depend upon is the house is a furniture taken on hire or is the furniture owned by my employer. If the furniture is taken on hire, then you will consider the hire charges. If the furniture is owned by the employer, you will take 10% of the cost of the furniture. This will give you the value of furnished RFA. From the furnished RFA, you will subtract how much rent has my employee paid to the employer. If I subtract the rent which my employee has paid to the employer, then the balance is going to be accommodation at concessional rent, and this is going to be the taxable value. This I cannot call it as rent-free anymore because the employee is paying the rent. So that is why I will call it as accommodation and concessional rent instead. Perfect understanding, guys. Yes, now under RFA, there is one more point, guys, which I'm getting tempted to discuss with you. Please listen to me. Let us say my employee was living in Chennai, okay? And in Chennai, he was given an RFA. Now, the employer asked the employee to shift to Bangalore, let us say. So, and the employer told the employee, don't worry, even in Bangalore, I will give you rent-free accommodation. So let us say April to October, he was living in Chennai, and November to March, he was supposed to go to Bangalore. But tell me, is it going to be possible for him to immediately vacate this house and go live in this house? No, right? He will need some time where he has both the houses. So let us say he had the Chennai house till December, all right, and he had the Bangalore house from November onwards. So are you noticing in the month of November and December, he is having two houses, guys? He is having the Chennai house also, he's having the Bangalore house also. Is this allowed? Yes, there are genuine cases like this where at a time employer may give the employee two houses. Here, if you see, till December he's having the Chennai house. November itself he got the Bangalore house. So November and December, 2 months he's having both the houses. So how will you calculate? Will you tax both the houses? No. You will see what's a period for which you're getting two houses. Up to 90 days, what will your answer be? Up to 90 days, which of the two will you tax? Any one of the two will you tax, whichever is lesser, any one of the two will you tax. But beyond 90 days, let us say for 4 months you got two houses. Now that is fishy. Why do you need two houses for 4 months? In case it is beyond 90 days, then both will be taxable. Like for example, if it is for 4 months, then for the first 3 months, for 90 days, anyone will be taxed. For the fourth month, which is beyond 90 days, for the fourth month, both of them you will tax. Got it? So with this, now we have fully completed learning about RFA. The entire provision is revised now. Are we thorough with this? Can I close the RFA discussion, guys? I hope you understood the last part. In case I have two houses, for 90 days, you will tax anyone, whichever is lesser. If I have both the houses for more than 90 days, for the excess number of days, for the balance, excess 90, over 90, whatever is the excess number of days, for that you will tax both the houses. Okay, so this was our first perquisite, which was about RFA. Okay, let me call this A. The 6 components are nothing but basic salary, DA forming part, all commission, whether fixed commission or turnover based commission, bonus, fees, and taxable allowances. Now I'm taking you to the second perquisite, guys, which is going to be about some facilities. Like, for example, let us say the employer has provided a servant to the employee, or he has provided, let us say, a watchman for the employee, or these kind of facilities. If my employer has given facilities to the employee like this, then these facilities will be taxable, but it will be taxable for which employees, guys? Facilities will be taxable for specified employees only. The employer is providing a servant to the employee. Employer is providing a watchman to the employee. These kind of facilities will be taxable for specified employees only. Now, can you try to recall and tell me who are these specified employees? Either they are directors of the company. They can be director at any time. It is not necessary that you should be a director throughout the year. You may be a director for just one day. I will still consider you a specified employee. And director may be any kind of director, part-time, whole-time, independent, non-independent, doesn't matter. Okay, first point, director. Then number 2, his substantial interest. He has substantial interest in the company at any time during the previous year. Now, substantial interest means what? Anywhere you see substantial interest, which number comes to your mind? Substantial interest means at least 20%. He has at least 20% voting power in the company at any time during the year. Then talking about the last point, the third point, if you look at his salary, when I say salary, I'm not talking about salary in kind. I'm talking only about salary which he has received in cash. I'm not talking about salary which he got in kind. For example, RFA is something which he got in kind. A car is something which he got in kind. I'm asking you to ignore the salary which he got in kind and look at the balance salary, the salary which he got in cash. And this salary is more than 50,000 rupees. Tell me, per month or per annum? More than 50,000 rupees per month or per annum? More than 50,000 rupees per annum. Out of these three, any one also fulfilled, you will call your employee as a specified employee. Understood this, everybody? Yes. So in my first purpose, we spoke about RFA. In my second purpose, I'm discussing with you about facilities. If my employer is giving facilities to my employee, like servant, watchman facility and all, it's going to be taxable. It's going to be taxable for specified employees only, but it will be not taxable for non-specified employees. And who are these specified employees, guys? Persons who were directors at any time during the previous year, person who has substantial interest, that is at least 20% voting power at any time during the previous year, or your salary in cash is more than 50,000 per annum. Okay, now listen to me. I have a question for you. I have a special situation for you. You try answering as well as you can. Let us say my employer has given a rent-free accommodation to the employee. In this house, there is a garden. To maintain this garden, the employer has provided a gardener also to the employee. Now, will this gardener be considered as taxable facility for the employee? What do you think? This gardener will not be considered as taxable facility. There is a circular on this. The circular says, you tell me, even if the employee was not living in this house, the gardener will still be hired to maintain this garden, guys. Is my employee getting any special benefit out of the blue? Some extraordinary benefit is my employee getting? No, my employee is not getting any extraordinary benefit. This house has a garden. Whether my employee is living in this house or not, to maintain this garden, gardener is anyways required. So this is not a special benefit which my employee is getting. Hence, this is not going to be a taxable facility. About this, there's a special circular which is there in the income tax department circular book. All right, so this was about facilities. But instead of facilities, what if there is a reimbursement? Now, reimbursement means what? Like, for example, employer is telling the employee, you hire a servant, I will reimburse the servant's salary. You hire a watchman, whatever you're paying to the watchman, I will reimburse. Now, don't you think even this reimbursement will become a benefit for the employee, guys? Because whose expenditure is it actually? It is actually employee's expenditure, but employer is reimbursing it. So even this is going to be a benefit for the employee. This benefit is also going to be taxable, but this benefit will be taxable for all employees, whether specified employees or not. It doesn't even matter. So reimbursement will be fully taxable for all employees. What kind of employee? It doesn't even matter. Did you understand this also, everybody? Is this entire page clear? Yes, RFA. See, RFA, I am confident that you have understood RFA. Okay. Now, the second discussion we had was about facilities and reimbursement. If the employer is giving a facility, the facility will be taxable for specified employees only. And but then if the facility is something like a gardener, which even if the employee was not living in that house, anyways, to maintain that garden, employer would have anyways hired a gardener. So he's not giving some special benefit to the employee. Such kind of perquisite, such kind of facilities will not be taxable. Reimbursements will be taxable for all employees because, come on, obviously, employees getting a benefit. Employees' expenses, employer is reimbursing, employees getting a benefit. It will be taxable for each and every employee. Okay, now listen to my next discussion. It's a slightly special, I would say, a special situation. You try to understand this. Okay. Now, let us say my employer is Indian Gas Company. All right. Now, this employer is giving the employee free gas cylinders. Now, for the employee, do you agree that this is going to be a benefit, guys? He's getting free gas cylinders from his employer. It is definitely going to be a benefit. And what do you think? Is this benefit a facility or is it reimbursement? It is clearly a facility. It is not a reimbursement. See, if it is reimbursement, I don't even have to think. Reimbursement, what will I straight away say, guys? I'll say it straight. It's fully taxable for all employees. No confusion only over there. But if it is a facility, now how will you calculate the value of this facility? Free gas cylinder. Employer is manufacturing these gas cylinders. Those gas cylinders he is giving to employee for free. It is going to be taxable. It's going to be taxable for specified employees only. But the question is, how will you calculate what is going to be taxable? I gave you two options. Will the market price of the cylinder be taxable, or will the cost price, the manufacturing price, the cost price will be taxable? Which of the two will be taxable? The cost price will be taxable and not the market price. Okay, so first of all, we spoke about facilities like servant and gardener and watchman and all. Then we discuss about what if the employer is himself manufacturing those goods, and those goods itself employer is giving to the employee. Then whatever is a cost price, that's going to be the taxable value. Reimbursement is anyways going to be taxable fully for all the employees. Okay, now listen to my next discussion. My next discussion is going to be about the education perquisite. Okay, now here I'll take you through the discussion step by step. Listen to my first point. What if the education fees is being reimbursed by the employer? Employer has children, okay, and their education fees is being reimbursed by the employer. Do you agree? First of all, it's a benefit for the employee. Yes, isn't it? Because his children's tuition fees employer is bearing. It is a benefit, and this benefit is going to be taxable. Reimbursement, so it will be taxable for which employees? It will be taxable for all employees. Okay. And then what about the employee's education expense is borne by the employer? Like for example, staff training expense. Now what about this staff training expense? Will this be exempt or will this be taxable? Staff training expense will be exempt. It will be fully exempt for all employees. It's going to be fully exempt. Okay, what if we provide an education facility to the children of the employee? Education facility, let us say education facility is being provided. It's a facility, guys. So as soon as you see facility, first of all, what comes to your mind? First of all, only specified employees will come to your mind because it's a facility. Okay, so if it's an education facility, you will see where is this education facility. It's in a school which is owned or maintained by employer. Or let us say it is in a school with which the employer has made some arrangement. All right. In that case, you will see what is the cost, reasonable cost of education in a similar institution, in a similar quality of a school, in a similar grade of school. What would be the fees? What would be the cost of education? If this cost of education is up to 1,000 rupees per month, then per month per child, then what will your answer be? Fully exempt. But what if it is more than 1,000 rupees per month per child, guys? Then it's going to be fully taxable. You will not say up to 1,000 exempt, beyond that excess is taxable. No. Like for example, if this cost of education number was 1,200, then how much you will tax? Full 1,200 you will tax, and not just the excess of 200. Okay, fully taxable. Obviously from this you can subtract any amount which employee has paid to the employer. Obviously you can subtract that. Tell me, here also do we have the limit of maximum 2 children, guys? No. Until now, maximum 2 children we have come across only in 2 places: children education allowance and children hostel allowance. Okay, education fees, it's going to be education fees reimbursed irrespective of the amount. 100 rupees, 10,000 rupees, irrespective of the amount, reimbursed will be fully taxable. Reimbursement will be fully taxable, that too for all employees. But facility will be taxable only for specified employees. If the facility is in a school which is owned and maintained by the employer, or if the facility is in a school with which the employer has an arrangement, this education facility, you will find what is the cost of education. If it is up to 1,000 per month per child, it's going to be fully exempt. If it is more than 1,000 per month per child, then it's going to be fully taxable. Is still clear, guys? This was my discussion with you regarding education facility. All right, so what are the perquisites we've learned? We first learned about rent free accommodation. We also spoke about furnished, unfurnished, and accommodation at concessional rent. We said that only for 90 days we can have we can have 2 houses both for 90 days only. Beyond 90 days, if we have 2, then both will be taxable. Up to 90 days, any one will be taxable. Then we discussed about facilities and reimbursement. We said facilities will be taxable for specified employees only, but reimbursement will be taxable for every employee. Then we studied about this Indian example. We studied what if the employer is himself manufacturing the gas cylinders, and those gas cylinders he is giving for free to the employee. It's definitely a facility. It will be taxable for specified employees only, but the entire cost price will be taxable and not the market price. But because facility only for specified employees, if it is reimbursement, it will be fully taxable for all employees. Then we discussed about education perquisite. Education perquisite, here we learned if it's just a reimbursement of education fees, irrespective of what is the amount, it's going to be fully taxable for all employees. If it is employees staff training expense, it's going to be fully exempt for all employees. But if it is education facility, that is employer is providing education in a school which is owned by him or in a school with which the employer has an arrangement, then in that case that facility is going to be taxable for specified employee only. But if the reasonable cost of education is up to 1,000 per month per child, nothing will be taxable. If it is more than 1,000 per month per child, then it's going to be fully taxable. Perfect understanding, everybody. Yes, now listen, I'm taking you to the next perquisite. The next perquisite is going to be very important from your examination perspective. Hence, listen to me carefully, and I will also be spending quite a lot of time with you on this particular perquisite. I'm going to be discussing with you about interest-free loan or loan at concessional rate of interest. Interest-free loan or loan at concessional rate of interest. See, over here, first of all, try to understand what is the benefit. The employee got a loan from the employer. Is this the benefit? No, loan anyways employee has to repay. This is not the benefit. What is the benefit? The employee is paying interest at 5% per annum. Okay, but the SBI lending rate, on which date do you see the SBI lending rate? You always see SBI lending rate on the 1st April of that previous year. You will not see the SBI lending rate on the date of the loan. No, you will take SBI lending rate on the 1st April of the year. SBI lending rate is, let us say, 12%. So guys, how much lesser interest am I paying? How much benefit is my employee getting? Don't you think my employee is getting a benefit of 7% per annum? 7% per annum concessional interest he is paying. This is the benefit which I am targeting, and loan is not the benefit over here. Understanding, everybody? Interest-free loan or loan at concessional rate of interest, the lesser interest which I have to pay, that is a benefit for the employee. All right, now listen, you will see what is the purpose. You will check what is the purpose, why was the loan given to the employee, and you will check the amount, what is the amount of the loan. Okay, now if the purpose happens to be the loan was given, let us say, to help you meet the cost of medical treatment of some Rule 3A disease. A Rule 3A disease, either the employee or his family members are suffering from this disease, and to help him meet this expenditure, employer gave him a loan at concessional interest, let us say. In such a case, it doesn't matter what is the amount of the loan, it will be fully exempt from tax. If the loan is to help you meet the medical treatment expenditure of Rule 3A disease, it's going to be fully exempt. All right. And you'll also look at the amount. You will see the aggregate original amount. You will see the aggregate original loan. If this is going to be up to 20,000, even then it's going to be fully exempt. Understanding, guys? First of all, what is the benefit? The benefit is not the loan. The benefit is a lesser interest which you have to pay. But if the loan happens to be to help you meet Rule 3A disease expenditure, or if the loan aggregate original loan is up to 20,000, then nothing is going to be taxable. In that case, it's going to be fully exempt. All right. Now, this is the provision which I want you to remember. But keeping this provision in your mind, I'm going to give you some 5 to 6 scenarios. Will you try answering the scenarios? You've understood the concept more or less? Yes, if the loan is to help you meet Rule 3A disease expenditure, or if the loan is to help you, or the loan's aggregate original amount is not more than 20,000, in both of these cases, it's going to be exempt. Now listen, guys. Let us get some better clarity on this. Listen to my scenarios one by one. In my first scenario, employer gave loan to the employee. Okay, this loan is for 2 lakh rupees. The employee is going to pay only concessional interest, which means employee is going to pay lesser interest. All right. Now, this loan, major part of the loan has been repaid. In the current previous year, this loan only, let us say, 18,000 rupees is outstanding. So tell me, is it going to be an exempt perquisite or is it going to be a taxable perquisite? Will the concessional interest be exempt or taxable? The loan amount was 2 lakhs, but only 18,000 is outstanding, which is within 20,000. So tell me, will it be exempt or taxable? It is going to be fully taxable, because which number are you going to consider? You are supposed to consider the aggregate original loan. What was the original loan, guys? 2 lakhs. This is more than 20,000. That's it. It is going to be fully taxable. You will look at the aggregate original loan. Okay. Then listen to my second scenario. In the second scenario, this time what happened is the employer gave 2 loans to the employee, guys. Loan number 1 was, let us say, for 6,000 rupees, and the employer gave one more loan to the employee, let us say loan number 2, and this was for 18,000 rupees. Okay. If you notice, both the loans do not exceed 20,000, both are within 20,000. And the employee is paying on this loan, he's paying only a concessional interest, he's paying only a low rate of interest. So definitely he's enjoying a benefit. Tell me, is it going to be exempt or taxable? Is this going to be exempt or is this going to be taxable? What do you think? You will look at the aggregate. Very good. What is the aggregate, guys? You're supposed to look at the aggregate original amount. Now, did you understand the meaning of both the words? Aggregate original amount. You're supposed to look at the total original amount. This is going to be how much? 24,000, guys, which is more than 20,000. Hence, what will my answer be? This is going to be fully taxable. You are supposed to look at the aggregate original amount. Okay, now look at the third scenario before you. This time, let us say I am talking about my current previous year is 22-23, let us say. Okay, the employer has given a loan to the employee, and this loan is for 25,000 rupees at 5% interest. This loan is given on 1st June 2019. And the SBI lending rate I'm giving to you on 3 dates. The SBI lending rate on 1st April 2019 was 8%. On 1st June 2019, 8.5%. And on 31st March 2020, or let me change the dates. On 1st April 2022, 8%. 1st June 2022, 8.5%, 31st March 2023, 9%. I want you to compute and tell me what the taxable value will be. I'll give you a moment. Come on. Tell me what the taxable amount will be. There are all different answers in the chat box. Do not send me the 750 number. That is a super silly answer. Listen, guys. First of all, out of these 3, which of the 3 will you pick? You will pick only the beginning of the year. I told you you're supposed to pick SBI lending rate on the first day of the year, which means you're supposed to pick 8%. Okay. Now, taxable value, listen, what's a loan amount? 25,000. What is the benefit you're enjoying? You're enjoying 3%. But how many months? June to March is going to be how many months? 10 months, right? Many of you forgot to do 10 by 12. The loan was given only on 1st June. This is going to be how much? 625 rupees. This is going to be the taxable value. Okay, you make sure you don't repeat this mistake again. All right. So in my first scenario, we learned I'm supposed to look at the original amount. The original amount should be up to 20,000, only then exempt. Then second scenario taught us you're supposed to look at the aggregate original amount. That is, you will have to see whatever are the loans which are outstanding during the year. All those loans put together, what was the original amount? That aggregate original amount, if it's up to 20,000, only then not taxable. Your aggregate was more than 20,000, hence it was taxable. The third scenario teaches us it is supposed to pick the SBI lending rate on the beginning of the year. Okay, now the same thing I am copying and pasting, just one small difference. Okay, I am let's say I'm calling it as a fourth scenario, just one small difference. Here instead of 8%, this was, let us say, 2%. Now can you tell me what the taxable number will be? Now what will the taxable value be? See, just because you see a different rate, please don't immediately calculate the difference. Is my assessee enjoying any benefit here? No, SBI lending rate is 2%, but he's paying much more than that. He's paying 5%. He's paying much more than the SBI lending rate, guys. So taxable value will be 0 because he's not enjoying any benefit. He's paying more than the market rate of interest. This was my fourth scenario. Now listen to my fifth scenario. In the fifth scenario, let us say same thing I'm talking to you about. During the previous year, 22-23, employer gave a loan to the employee, loan of 25,000 rupees, 5% interest on 1st June 2022. SBI lending rate are given to you on 3 dates, but the loan is given for the purpose of medical treatment of Rule 3A disease. Now tell me, what will the taxable value be? Taxable value will be nothing. It is for Rule 3A disease. So does it matter to you what the amount is? Does it matter to you it is more than 20,000? No. If any out of these two conditions is fulfilled, this or this, either the purpose is for Rule 3A disease or aggregate original is up to 20,000, any of these two conditions fulfilled, you say it is exempt. Here it is for medical treatment of Rule 3A disease, hence it is going to be exempt. Irrespective of the amount, it's going to be exempt. Now listen guys, one last scenario I want to discuss with you. This last scenario is slightly important from the examination perspective. It is a little complicated also. Listen to me very carefully, take it as a challenge and try to understand in the very first instant itself. The loan was 25,000 rupees for medical treatment of Rule 3A disease. Okay. Then later on 1st Jan 2023, the medical insurance company, they gave us compensation of 8,000 rupees. Now what will happen? Medical insurance company, they gave us compensation of 8,000 rupees. See, till they don't give us any compensation, till then the answer is going to be exempt. But once we get medical insurance compensation, are you noticing double benefit we are getting? We're getting concessional rate loan from the employer also, and even health insurance company, even medical insurance company is giving us compensation. Two benefits are getting, which is unfair. So in that case, now that we received medical insurance compensation, now taxation will start. Taxation will be on what amount? But it will be on the insurance compensation amount. It will be on the 8,000, because to this extent only you have gotten double benefit. You will calculate it on 8,000 amount. And what's the concessional interest? How much lesser interest are you paying? You are paying 3% lesser interest. But for what period? For what period, guys? Will you calculate from 1st June? No. When did you get the double benefit? Only on 1st Jan. So only for 3 months you will calculate. And this is going to be how much? This is going to be 60 rupees. This is going to be your taxable value. So in case the loan, listen to my conclusion guys. If the loan is for treatment of Rule 3A disease, all right, if the loan is given for treatment of Rule 3A disease, then it's going to be exempt. But if the insurance company gives me medical insurance compensation, then it's going to become a taxable perquisite for me because I'm getting double benefit. But it will be taxable when? Only on 1st Jan 2023. It will be taxable on what amount? Only on the double benefit amount, only on this 8,000 rupees. So on this 8,000 rupees, the differential interest for 3 months, this is going to be my taxable number. Is this also crystal clear for everybody? Yes, guys. So this was my discussion with you, my entire discussion with you about interest-free loan at concessional rate of interest. We have done this so well that any adjustment they give you in the examination, it should not feel like a new adjustment for you. 360-degree, whatever is possible, I have discussed with you. Yes, guys, can I close this adjustment? Could you please give me some confirmation? Are all my 6 scenarios comfortable for you, especially the last one? Yes, the last one I calculated only for 3 months period. Why did you notice that? Because I started getting the double benefit only on this date. All right, guys, only then I will be getting the taxable value. All right, whenever I get the double benefit, then I will get the, then taxation will start. Now, after this, I'm taking you to the next perquisite, the 6th perquisite. We're going to be learning about giving a movable asset for use. Here, what happens is my employer has given to the employee a movable asset just for the purpose of use, which means my employer has not transferred the asset. He is just giving the asset for use. Here, you will first of all check what kind of an asset is it? What kind of an asset are we giving? If you are giving computers or laptops, then what will your answer be? In that case, it's going to be fully exempt. If we are giving, let us say, telephone or a mobile phone, then also your answer will be that it's going to be fully exempt. In case we are giving any other movable asset, then what will your answer be? In that case, you will have to see does the employer own the asset or has the employer himself taken it on hire. If he owns the asset, you will take 10% of the cost of the asset. If the employer himself has taken it on hire, then you will take the higher charges. But from both of these, you are allowed to subtract any amount which the employee has paid to the employer, because to that extent employee is not getting a benefit. Okay, so this was my 6th perquisite. My employer is giving to the employee some movable asset just for the purpose of use. If it is computer or laptop, or if it is telephone or mobile phone, fully exempt. If it is any other asset, guys, then up to 10, then in that case, if the employer owns it, 10% of cost will be taxable. If the employer has himself taken it on hire, higher charges will be taxable. Are you noticing in perquisites I'm not calculating the exempt number? Did you notice, guys? In all the perquisites, I'm straight away calculating what? The taxable number. Okay, at this stage, I have a question for you. Listen to my example and try and answer. Let us say my employer gave to the employee a car for the purpose of use. Okay, the car was given on 1st June 2022 and the cost of the car is, let us say, 1 lakh rupees. I want you to calculate and tell me what is the taxable value. Come on, guys, calculate and tell me quickly what's the taxable value. Do not make a silly mistake this time. Will it be 10,000? No, because if it was that simple, I wouldn't have asked you the question, right? So what's going to be the taxable number? Is it computer or laptop? No. Is it telephone or mobile phone? No. Any other asset, take the employer owns the asset, so 10% of cost. That is going to be 1 lakh rupees into 10%, but 10% per annum. We got the car only on 1st June, so we will calculate only for 10 months, and that is going to be 8,333. Perfect understanding? Yes, so this was our adjustment, our 6th adjustment, our 6th perquisite relating to movable asset given for use. We've spoken about RFA, we've spoken about facilities and reimbursements, we've spoken about education facility, interest-free loan, and now we're talking about movable asset use. All right, if the employer owns it, 10% of the cost you will take. If the employer has himself taken it on hire, then higher charges you will take. Then listen to my next perquisite. What if the employer is giving a movable asset to the employee, but this time he is transferring the movable asset. In that case, what will you do? What if it's a case of transfer of movable asset? In that case, listen to me carefully. I'll tell you a certain manner, an easy method in which you can finish off the calculation. You will first of all start with what was the cost to the employer. Long back when the employer had purchased it, what was his cost? From that, you will subtract normal wear and tear. Please do not call it depreciation, guys, because depreciation is terminology which we used only in the PGBP head. Here, please don't change it. Please don't try to adopt some other terminology. It is normal wear and tear. Okay. From that, we will subtract any amount which employee has paid to the employer, and the balance number, this is going to be a taxable perquisite. But the whole complication over here is how to calculate normal wear and tear. Now that will depend upon what kind of an asset is it. If it happens to be a computer or a laptop or any other electronic gadget, like for example a phone or an iPad, then you're going to calculate at 50% WDV. If it happens to be motor car, then you will calculate at 20% WDV. If it happens to be any other asset, then you will calculate wear and tear at 10% SLM. I have a question for you. Motorcycle, how will you calculate? Quickly tell me which bucket, first, second, or third. Motorcycle will come under 10% SLM, not motor car, because this is only motor car. This is not every vehicle. I'm talking only about car for 20%. Then tell me, refrigerator will be how much? First or third? Refrigerator, you will put it under which bucket? Refrigerator, you will put it under the third bucket, because refrigerator is not electronic, it is electrical. It is electrical item, it is not electronic. There's no software and all there, right? So a refrigerator will come under any other asset. So be careful. 50% WDV, motor car 20% WDV, any other asset 10% SLM. But guys, the story is still not over. This normal wear and tear you will calculate for how many years, guys? You will calculate it for the number of years for which the employer has used the asset for official purposes. Like for example, if the employer was using the computer at home, and that computer, if employer is giving to the employee, will you calculate normal wear and tear? No. You will calculate normal wear and tear only for those years for which the employer has used the asset for his official purpose. And when you're calculating the number of years, you are supposed to take completed years only. In case you have any fraction, what are you supposed to do with the fraction? You're supposed to simply ignore the fraction. All right. So two special points. All electrical items like washing machine, refrigerator and all will come under 10% SLM, and other vehicles, only motor car will go under 20% WDV. All other vehicles will also come under 10% SLM. All right, guys. So this would be our entire discussion regarding transfer of movable asset. So two things we have spoken about. We have spoken about use of movable asset and transfer of movable asset. If it is used, computer, laptop, and telephone are fully exempt, guys. Any other asset, if the employer owns it, 10% of cost is taxable. If the employer has taken it on higher charges are taxable. But please don't forget this 10% is per annum. Then after that, I discussed with you, in case I'm going to transfer a movable asset to the employee, then we will see long back when the employer had purchased, what was the cost for him. Subtract normal wear and tear. Do not call it depreciation. Also subtract whatever amount employee has paid to the employer. The balance is going to be a taxable number. Now, how to calculate normal wear and tear? It depends. If the asset is computer, laptop, or electronic, 50% WDV. Motor car, 20% WDV. Any other asset, 10% SLM. Now, this depreciation, this wear and tear, you will calculate only for the years for which the employer has used it for official purposes. If the employer has used it for his personal purposes at home, then you will not calculate any normal wear and tear. Then we said even this years, you will calculate only completed years. Any fraction, if you have, you will ignore the fraction. Are we comfortable with the discussion till here, everybody? Yes, so this was our discussion on the 7th perquisite. Now I'm taking you to the next perquisite, which is a very simple one, a very easy one. Leave travel. concession. Okay, in leave travel concession, what is happening? The employee, along with his family members, they are going on a vacation. Now, where are they going on a vacation? They're going on a vacation in India. All right, and how many vacations will we let them take? In every block of 4 calendar years, we will let them take 2 vacations. For example, in the block 22, 23, 24, 25, in this block of 4 years, I will let them take 2 vacations. Okay, but let us say my employee did not take any vacation at all. In that case, what will we do? We will let him carry forward to the next block. See, in the next block, he's anyways allowed to take 2 vacations. Now, he did not take 2 vacations. I will allow him to carry forward. But how many I will allow him to carry forward? I will allow him to carry forward only 1. So, which means in this block of 4 years, he can now take 3 vacations. But this first vacation, he doesn't have a choice. He will have to take this first vacation only here. He cannot utilize his first vacation in the remaining 3 years. He will have to utilize his first vacation in the first year only. Then in leave travel concession, what is the focus? Is the employer helping you meet your transportation expenses, your travel expenses, your traveling tickets expenses, or is he helping you meet your hotel expenses? Not your hotel expenses. Leave travel concession is only to help you meet your travel expense, not to meet your hotel expenses. Here, when I talk about family, what do I mean by family? If I am the assessee, family would include my brother, my sister, my children, and my parents, and will also obviously include my spouse. Now, whether brother, dependent brother, whether sister, dependent sister, whether children, dependent children, and parents, dependent parents, they should be dependent. But when I talk about children, I'm talking about maximum 2 children only. But relating to 2 children in LTC, you have a special point. Listen, what if my elder child was one single child and my younger born were twins? I have totally 3 children, but you will count it as only 2 children. But what if my elder born was twins and my younger born was one single child? I have 3 children, you will count them as 3 only. But if there are 3 children, you will give exemption for how many children? Proportionately, you will calculate and you will give me exemption for 2 children only. Are we comfortable? Okay. Till here, this was my 8th exemption, guys. Leave travel concession. Employee and his family members are going on a vacation. What if the employee says that I am not going, I'll work, family you go, will you get exemption? No, you will get exemption only if all the conditions are fulfilled. If all the conditions are fulfilled, then LTC is going to be fully exempt. What are the conditions? Employee and his family members should go on a vacation in India twice in a block of 4 calendar years. If you do not go, then we will allow you to carry forward maximum 1, and this 1 you will have to take in the first year only. Leave travel concession is to help you meet your traveling expense and not to meet your hotel expense. Then listen, I have a special situation for you. What if the employee did not go on a vacation? Okay, he did not go on a vacation, let us say, and the employer is still giving him LTC. This is called LTC encashed. LTC is encashed by employee, means he did not go on a vacation and he still took LTC from the employer. What about this LTC, guys? Very good. This is going to be fully taxable. If these conditions are fulfilled, then the travel tickets which the employer is paying will be fully exempt. But if I do not go for the travel at all, if I do not take a vacation at all, I am not going for the vacation. I am telling the employer, see, had I gone for a vacation, you would have spent 50,000 rupees on me. I am not going on the vacation. You still give me 50,000 rupees. Now, this 50,000 rupees which the employer is going to give me, even though I did not go on the vacation, he's going to give me this 50,000 rupees. This is going to be fully taxable for me. Okay, so this was my discussion on leave travel concession. So Hale, did you understand? Yes, who was family, dependent brothers and sisters, dependent children, maximum 2, dependent parents and spouse. In case I have children, I will allow exemption only for maximum 2 children. All right, now listen guys, I'm taking you to the next discussion, my next perquisite. Just give me a moment, let me just get some water. All right, let me take you forward now. I'm taking you to the next discussion, guys, our ninth discussion, which is going to be about medical facility. By the way, before I forget, when I talk about leave travel concession or when I talk about ticket reimbursement, if my assessee is traveling by train, okay, then what class? First class, second class, or third class? In that case, first class AC ticket can be given by the employer. Then what if he is traveling by air? In that case, only economy class airfare and not business class, only economy class airfare. What if he's going by bus? In that case, first class, deluxe class bus you can consider. Okay, that is it with our leave travel concession. Taking you forward to our next perquisite, which is going to be the medical facility. Now, medical facility, let us have a detailed discussion. In case the medical bill is simply reimbursed by the employer, medical bill reimbursement, what will your answer be, guys? Medical bill reimbursement is going to be fully taxable for the employee, irrespective of what kind of employee, it will be taxable for the employee. But guys, what if it happens to be a medical facility? If the facility is in a hospital which is owned or maintained by employer, or if let us say it is in a hospital which is a central government hospital or a state government hospital or a local authority hospital, or let us say it is a hospital which is recommended by the chief commissioner of income tax, if it happens to be any of these hospitals, then the facility is going to be fully exempt. All right, and who can get treated in this hospital? For whose treatment are we giving the benefit over here? For the assessee or for his family? Family would be whom? The family would include spouse, family will include the children of the assessee, whether dependent or not, and then it will also include dependent parents, dependent brothers, and dependent sisters. All right, so spouse, children, dependent parents, dependent brothers and sisters, for their treatment, if medical reimbursement, fully taxable. If medical facility, if it is in a hospital which is owned or maintained by the employer, or in a government hospital, or in a hospital recommended by chief commissioner of income tax, then it's going to be exempt. Otherwise, it's going to be fully taxable. Any other hospital, it's going to be fully taxable. Then tell me, what about health insurance premium? Health insurance premium for the employee or for his family members paid by the employer. First of all, do you agree it's a benefit for the employee? Of course, it is a benefit, right? His health insurance premium employer is paying. It is a benefit, but it is going to be fully exempt. Okay. And then talking about what about medical allowance, guys? What do you do to medical allowance? Medical allowance, did we learn about it separately? No. So I told you, if you come across any other allowance, what would your answer be? Any other allowance is going to be fully taxable. All right. So medical reimbursement is going to be fully taxable. Medical facility in these hospitals will be exempt. Health insurance premium will be exempt. Medical allowances will be fully taxable. All right. Then under medical perquisite itself, one more discussion I want to have with you. What if the medical facility is being given to the employee outside India? What if the medical treatment is happening outside India? In that case, there are three benefits which my employee gets. Number one, he gets a benefit of medical treatment expense. The treatment expense is borne by the employer. Number two, he gets a benefit of the traveling expense. Whatever is a traveling expense expense to travel to this foreign country, it is met by the employer. And number 3, he gets stay cost benefit. Whatever expenses he is incurring on the stay, even the stay expenses are being borne by the employer. So 3 benefits he is going to get, guys. Now, how will you tax it? How will you tax it? See, this medical treatment expense is going to be exempt, but it will be exempt up to how much? It's going to be exempt up to the RBI limit. Okay. Similarly, even the stay cost benefit is going to be exempt, but it will be exempt only up to the RBI limit, whatever limit is prescribed by the RBI. What about the traveling cost that is incurred by the employer for that foreign country travel? That for this traveling expense, it will either be exempt or it will be taxable. See, it will be exempt if GTI is up to 2 lakhs, then it's going to be fully exempt. If GTI is going to be more than 2 lakhs, then it's going to be fully taxable. So whether it is exempt or not, it depends upon GTI. If GTI is up to 2 lakh, it's going to be fully exempt. If GTI is more than 2 lakh, it will be fully taxable. All right. Then tell me one more thing. This when I talk about traveling expense, when I talk about stay cost, who should travel, who should stay? Is it just the patient? No, I will consider the patient and also one attendant. All right. So this was a detailed discussion of the entire medical benefit for you, entire medical perquisite for you. Understanding? So giving you a revision in case the medical facility is being given in a hospital which is owned or maintained by employer, or if it is given in a hospital which is owned or maintained by central government, state government, local authority, or one which is recommended by the Chief Commissioner of Income Tax, then it is going to be fully exempt. If it is pure reimbursement, then it's going to be fully taxable. Health insurance premium is going to be exempt. Medical allowance is going to be fully taxable. And if the medical facility is being given outside India, then you will consider this. Medical treatment and stay, both of this will be exempt up to the amount prescribed by RBI. Let us say foreign medical treatment expense, stay expense and all employer is bearing. It's a benefit for me. My expense he is bearing. But medical treatment and stay expense will be exempt for me up to RBI limit. Traveling expense will be exempt for me if my GTI is up to 2 lakh. Otherwise, it's going to be taxable. Okay, so this was our discussion regarding the medical facility, the medical benefit. All right, now listen to my next discussion, my 10th perquisite. This is going to be important, guys. At this stage, I do not want you to give up. I want you guys to listen very, very carefully. We're going to be talking about the motor car perquisite, one of the most important perquisites. If you get a salary question and if you don't get an adjustment from here, very rare. All right, listen to me. I will try to simplify it for you as much as possible. We will divide this entire perquisite in 3 parts. We will first understand the 3 parts, okay? Absorb the 3 parts really well, because once I finish the 3 parts, I will give you some situations and you only will have to answer. All right. And if you're able to answer them right, it will boost your confidence. 1.5 months before the examination, we need that confidence. All right. So pay attention, answer properly, and close it confidently. All right. That's going to be our objective. So listen, guys, in my first bucket, my employer is giving a car to the employee. By the way, this entire discussion, is it going to be motor car transfer or is it going to be motor car use? I'm only talking about motor car use. The employer is not selling the car to the employee. The employer continues to own the car. Employer is just giving the car to the employee just for the purpose of some use. Okay, employer continues to remain the owner of the car. So the employer owns the car. Employer has given the car to the employee. Now on this car, we will be incurring some expenses, guys. Even those expenses are being borne by the employer. In that case, for the employee, do you agree it's a benefit? 2 benefits he's getting. Number 1, he's getting the car. And number 2, even expenses on the car are being borne by the employer. It's getting two benefits. So for the employee, what will be the tax treatment? See, for the employee, what will be the tax treatment? It all depends upon what is the employee using the car for. If he's going to use the car for just official purposes, then what will your answer be? If he's going to use the car for just official purposes, it's going to be fully exempt. If he's going to use the car for personal purposes, then what will the answer be? See, if he's going to use it for personal purposes, always for personal purposes, look at what are the benefits he's getting. First benefit, he's getting the car. He's getting the car, guys. So for the car, what will be taxable? 10% of the cost of the car will be taxable. Okay. Then what's the second benefit he's getting? He's getting the expenses. So whatever expenses are being met by employer, even that will be taxable. But from this, we can subtract any amount which the employee has paid to the employer. We will subtract that. And the balance number, whatever you get, that balance number is going to be the taxable number. Okay, then listen to my third point. What if the car is being used for official purposes and for personal purposes? What if it is being used for both? In that case, it depends upon the capacity of the car. If the capacity of the car is up to 1600 cc, then in that case, 1800 per month is dash. If the capacity of the car is more than 1600 cc, then 2400 per month is dash. In case even a driver is being provided, then you will add another 900 per month. Tell me, guys, how will you fill in the blanks here? 1800 per month is exempt or taxable? 1800 per month is taxable, 2400 per month is taxable. Guys, this is perquisite. In perquisite, we straight away calculate the taxable number. Okay, here let us say my employee has given some amount to the employer. Will we subtract this amount, guys? No, you are supposed to ignore it. Any amount which employee has given to the employer, you are supposed to simply ignore it. Okay, see what is the situation in front of me? The first situation which I'm discussing with you over here, who owns the car, guys? Employer. And who is incurring the expenses? Employer. So if this is a situation where car is owned by the employer, even expenses are incurred by the employer, you will see, is a car being used for just official purpose, is a car being used for just personal purpose, or is a car being used for both? If it is being used for just official purposes, it's going to be fully exempt. If it is going to be used for personal purposes, then 10% of the cost of the car plus expenses met by the employer minus whatever amount we have recovered from the employee, the balance is going to be taxable. If the car is being used for official and personal purposes, then it depends upon the capacity of the car, guys. Up to 1600 cc, 1800 per month is taxable. More than 1600 cc, 2400 per month is taxable. And in case driver is provided, we will add another 900 per month. But here, in case we recover any amount from the employee, we will not subtract it. Okay, now listen, guys. In this bucket, okay, in this bucket, if we get more than one car in this bucket, then what will you do? In this part, you can have how many cars? In this part, you can have maximum one car only. In case you have more than one car, guys, what will you do with the balance cars? The remaining cars, you will tax it as if it is just personal purposes. You can have in this in the first bucket, in the third point, you can have only one car. In case you have more than one car, the balance car, you will put it under the personal purposes bucket. Now you know, right? How will you decide which car to put where? You will try all permutations and combinations. You will see whichever is giving you the least taxable number. On that basis, you will choose. Just like how you do in deemed to be let out property in IFHP head, same way. You will see all the permutations and combinations. Whichever combination is giving you the least total taxable number, you will follow that. Okay, then listen, this perquisite, will it be taxable for every employee? No, this is going to be taxable only and only for my specified employees. And can you tell me who are specified employees? Guys, come on, let's revise. Who are specified employees? Employees who are directors of the company at any time during the year. Then a director then any employee who had substantial interest at any time during the year. Substantial interest means what? At least 20% of the total voting power. And what's the third point? What's the third situation under specified employees? Your salary in cash. Your salary, if I ignore the salary in kind, your salary in cash is more than 50,000 per annum. Then you're a specified employee. So this is going to be taxable only for the specified employee. Okay, then listen to my second bucket, guys. In my second bucket, what happens is, again, my employer is giving a car to the employee. Okay, but on this car, whatever expenses are incurred, those expenses are incurred by the employee only. So here, the employer, guys, give me a moment. I'll have to quickly close this file and restart. The pen has stopped writing. I'm sorry for the disruption. Listen, let me continue with what I was telling you. So, in case the employer has given the car to the employee, which obviously means that the employer, he owns the car, okay, and he has given the car to the employee, but the expenses are being borne by the employee only. So, what's the situation over here now? Who owns the car? The car is owned by the employer, and who is incurring the expenses? The employee is himself incurring the expenses. In such case, what will you do? Again, you will see what is the car being used for. Again, same three things are possible. Either the car may be used for just official purposes, or it may be used for just personal purposes, or it may be used for official and personal purposes. If it is being used for official purposes, what will your answer be, guys? Very simple, obvious answer. You will say that it is going to be fully exempt. But what if it is being used for personal purposes? In personal purposes, what do I tell you? Always look at what are the benefits which he is getting. Tell me how many benefits is he getting over here? Don't you think he's getting only one benefit, which is the car? So for the car, what will you take, guys? For the car, what will be the taxable number? You will take only 10% of the cost of the car. But from this, in case the employee has paid any amount to the employer, you will subtract that, and the balance alone is going to be your taxable value. Okay, then what if it is being used for official and personal purpose? Then you will look at the capacity of the car again. If it's up to 1600 cc, what will your answer be? In that case, 600 rupees per month is going to be taxable. What if the capacity of the car is more than 1600 cc? In that case, 900 rupees per month is going to be taxable. Here, you will have to ignore the driver, because anyways, the employee is himself bearing the expense. So you will forget about the driver. And here, if the employee is paying any amount to the employer, even this you are supposed to fully ignore, just like how you ignored even in the first bucket. Okay, so in my first bucket, my car is being in the first bucket, the car is owned by the employer. Even expenses are incurred by the employer. Here we have three situations. In my second situation, again the car is being owned by the employer, but expenses are incurred by the employee only. If the car is used for official purposes, fully exempt. If the car is used for just personal purposes, you will see what is the benefit. The benefit is a car. So for the car, you will take 10% of the cost of the car. In case employee has paid any amount to the employer, we will obviously subtract that. The balance will be taxable. And then if it is being used for official and personal purposes, then up to 1600 cc, 600 per month will be taxable. More than 1600 cc, 900 per month will be taxable. Any amount which we are recovering from the employee, we will not consider. Did you notice? Even over here where we have fixed numbers, we don't consider the amount recovered from employee. And even over here when we have fixed numbers, we don't consider the amount recovered from the employee. Perfect understanding, guys. This was my second bucket. And even this bucket, guys, it's going to be taxable for whom? It will not be taxable for every employee. It's going to be taxable for specified employees only. And you know very well who the specified employees are. Right now, I'm taking you to the third bucket, my last bucket. This time also, but then this time the employee, he himself has the car, he himself owns the car. The employer is just helping him meet the expenses. He's just helping him meet the expenses. What's the situation over here? The car is owned by the employee. Only the expenses are being met by the employer. In such case, what is going to be the taxable value? You will see what is the expense which the employer has met. From this, if you subtract all the official expenses, guys, what will you be left with? You will be left with what are the personal expenses. From this personal expenses, we will subtract any amount which the employee has paid to the employer. Okay, the balance number, this is going to be the taxable value of the perquisite. But here, all this is simple. The trick is how will you find the official expenditure? The official expenditure, it depends. Has my employee maintained a logbook or has he not maintained logbook? If he has maintained logbook, from this itself you will get to know what is official expense, what is personal expense. But if he is not maintaining logbook, then it depends upon the capacity of the car. Up to 1600 cc, 1800 per month is dash. And more than 1600 cc, 2400 per month is dash. If even driver is being given by the employer, you will add another 900 per month. Please help me fill in the blanks. 1800 per month is what? Come on, tell me. 1800 per month is what? It is not taxable here. 1800 per month is official expenditure. 2400 per month is official expenditure. I am trying to find this only, no, over here. You got it, guys. So in my third bucket, the employee himself owns the car. Only and only the expenses are being met by the employer. So when this sort of a situation exists, you will see what is the total expense which the employer has met. From that, you will subtract what are the official expenses. You will get the personal expenses. From the personal expenses, you remove the amount which the employee has given to the employer. The balance is going to be a taxable value. Now, these official expenses, what are the official expenses depends upon, does my employee maintain a logbook or does he not maintain a logbook? If he does maintain a logbook, then you will take the numbers from there itself. But in case he doesn't maintain a logbook, in that case, it depends upon the capacity of the car. Up to 1600 cc, 1800 per month will be the official expense. More than 1600 cc, 2400 per month will be the official expense. If driver is given, you will add another 900 per month. But this situation is going to be taxable for whom? This will be taxable for all employees. Only when the car is owned by the employer, only there you say taxable only for specified employee. But if the car is owned by the employee, then it's going to be taxable for all the employees. You just remember it this way, guys. This way, the motor car perquisite is not as dreadful as most of you think it is, right? You just learn it as 3 buckets. In the first bucket, the employer owns a car. Expenses are incurred by the employer. 3 situations. Official purpose is exempt. Personal purpose, you will see the benefit. Official and personal purpose depends upon the capacity of the car. Then second bucket, car is owned by the employer. Expenses are incurred by the employee. Official purpose is exempt. Personal purpose, you will see the benefit. Official and purpose, fixed numbers depending upon the capacity of the car. Always remember, when the numbers are fixed depending upon the capacity of the car, you don't consider the amount which is recovered from the employee. Third bucket, employer owns the car. Employee owns a car. Only the expenses are being met by the employer. Here, you will see how much expense did the employer meet minus official expenses. You will get the personal expenses. From that, if you subtract the amount which is recovered from the employee, the balance is going to be my taxable number. If you've understood this entire thing properly, can I ask you some questions? Will you try to answer? Yes, listen guys, in my first situation before you, the car is owned by the employer, okay? Even expenses are incurred by employer and it is being used for official and personal purpose. Tell me which bucket, which point? Which bucket, which point? Car owned by the employer. Expenses are incurred by the employer, used for official and personal purposes. This is going to be the first bucket. Third point, guys. Here, it depends upon the capacity of the car. Do you remember that? Yes, if it is up to 1600 cc, then 1800 per month is taxable. And if it is more than 1600 cc, then 2400 per month is taxable. Even if driver is provided, then you add another 900 per month. Okay, then tell me, in this situation, it's going to be taxable for whom? This situation is going to be taxable for specified employee only. Okay, now answer my second situation. In my second situation, again, the car is owned by the employer, okay, but expenses are met by employee only, used for official and personal purpose. Tell me which bucket, which point? This is going to be under the second bucket. Third point, here again it depends upon the capacity of the car. Up to 1600 cc, how much will you say? 600 per month is taxable. More than 1600 cc, what will you say? More than 1600 cc, 900 per month is taxable. And guys, here I told you driver will be irrelevant. And can you tell me, even situation 2 is taxable for whom? It is taxable for specified employee only. And what is one more common point between both the situations, guys? In both the situations, any amount which the employee has paid to the employer, do we consider it? No. In both the situations, any amount which employee has given to the employer, we simply ignore it. Perfect understanding? Yes, you know why I've asked you these two situations? In both the situations, we have a lot of common points. In both of them, the amounts are fixed depending upon the capacity of the car. All right. In both the situations, taxable for specified employees only. In both, any amount recovered from employee, I do not consider. All right. Then, and one more thing, please notice my first bucket and my second bucket. In both of these buckets, who owns the car? The car is owned by employer and it is taxable for whom? For specified employee only. But in my third bucket, the car is owned by whom? In my third bucket, the car is owned by employee and this is going to be taxable for all employees. Perfect understanding? Yes, this was my entire discussion regarding the car perk visit with you. All right, I think we've spent quite a lot of time on the car perk visit. I think you should be pretty confident with this by the end of it. Whenever you get a question, try to fit it under a bucket first. Then go deeper into that bucket and see which of the 3 points will be attracted, and then you will be able to get your answer. All right, so this is it about my discussion regarding the 10th perk visit. Now I'm taking you to the 11th perk visit, guys, and that is relating to lunch perk visit. Okay, now let me give you a 360-degree perspective about this. In case my employer gives lunch allowance, what will your answer be? Did we study about it separately? No. I told you if I did not discuss with you about any specific allowance, what will your answer be? Your answer will be that it's going to be fully taxable, no exemption. All right. What if my employer is giving tea or refreshments to my employee? Then tea, refreshment during office hours and all will be fully exempt. But what if he is giving a proper lunch facility? In that case, you will have to see where is this lunch facility being given. If it is being given in some offshore location or if it is being given in some remote location, then what will your answer be? In that case, you will say it's fully exempt. But what if the lunch facility is being given in any other place? In that case, rupees 50 per meal per day is going to be exempt. See, in all other cases, what you will do is, you will see first of all, what is the cost to the employer? Okay. From this, you will give the exemption. What is the exemption? The exemption will be 50 rupees per meal per day. Then you will subtract any amount which employee has paid to the employer, and the balance that you get, this is going to be your taxable value. Got it, guys? So in case my employee is getting any lunch allowance, that's going to be fully taxable. Lunch allowances are fully taxable. Tea, refreshments during service is going to be fully exempt, but lunch facility given in an offshore location, in a remote location, is going to be fully exempt. In any other location, 50 rupees per meal per day is going to be exempt. All right. So how do you calculate? You will see what is the cost for the cost of the lunch that the employer is bearing. From this, you will give the exemption of 50 rupees per meal per day. You will subtract any amount which employee has paid to the employer, and the balance is going to be taxable. This is your lunch perquisite. All right. Then taking you forward, what about gifts? In case, see, about gifts, listen, it depends upon I'm getting the gift from whom. If I get the gift from employer, it will go under the head salaries. If I get the gift relating to my business or profession, then it will go to PGBP, and under PGBP, under section 28 subsection 4, it will be taxed. If I'm getting the gift from any other person, it will go under the head IFOS. Right. My focus right now is about this gift which my employer is giving me, which will go under the head salaries. Now here it depends, is the gift given to me in kind or is the gift given to me in cash? If the gift is given to me in cash, there is nothing more for me to see. Irrespective of the amount, it's going to be fully taxable, irrespective of the amount, guys. But if the gift happens to be in kind also includes gift voucher. Keep that in mind. If the gift happens to be in kind, here you will see what is the value of the gift. If the value of the gift is up to 5,000, then it's going to be fully exempt. If the value of the gift is more than 5,000, then you have two views. In the first view, if it is more than 5,000, it's going to be fully taxable. And the second view, the view 2, is if it's more than 5,000, then the excess will be taxable. Like, for example, if the value of the gift is 12,000 rupees, in the first view, full 12,000 I will tax. But in the second view, only the excess 7,000 I will tax. Both the views are fine. You can choose either of them. Obviously, your answer will accordingly change, but that is allowed. Perfect understanding, guys. I hope you're not losing your patience. Just another 10 minutes, guys. According to me, I think we should get done by then. All right, just another 10 minutes. I know you might be hungry. It's time for dinner, but then just hold on another 10 minutes. All right, the gift perquisite, I hope you grasped it well. If the employer is giving a gift to the employee, then it will go under the head salaries. All right, and if it is gift in kind, then it depends upon the value of the gift. Up to 5,000 exempt, more than 5,000, either you tax it fully or you tax just the excess. But if the gift is in cash, guys, you do not have to look at anything else. Okay, if the gift is in cash, it's going to be fully taxable, irrespective of the amount. Then listen to my next facility, my next perquisite. I'm talking about a club facility. All right, if the club facility is a health club or if it is a sports club, okay, and this club facility is being provided at the employer's premises, for example, a gym, or let us say a badminton court, and this facility is being provided to all employees. If all these conditions are fulfilled, it is going to be exempt. Otherwise, even if any condition not fulfilled, it's going to become taxable. So club facility, if it is a health club or if it is a sports club, and if it is being given at the employee's premises only, employee doesn't have to travel to somewhere else for this facility. It is in the employer's premises only. And if it is being given to all the employees, if all the three conditions are fulfilled, it's going to be fully exempt. Otherwise, it's going to be fully taxable. Okay, then taking you forward, we're just left with the smaller concepts now. We have to discuss about sweat equity shares. What if my employer gives sweat equity shares? See, relating to sweat equity shares, I don't want to discuss with you just from the salaries head. I also want to discuss with you from capital gains head also. It will give you some extra revision. Listen to me. Under the salaries head, first of all, do you agree it is a benefit which my employee is getting, guys? Sweat equity, see, he's paying something lesser and he's getting shares of the company. It is definitely a benefit for him, and therefore definitely I will tax it for him. Okay, but what will be taxable? We will see what is the FMV of the shares on the date of exercise of option. From that, I will subtract the exercise price. What is the exercise price? Nothing but the amount which was paid by the employee to get these shares. The balance number that you get, that is going to be the taxable number. But this taxable number will be taxed in which year? You will see what is the assessment year relevant to the previous year in which the shares were allotted. So in, like for example, if the shares were allotted in, let us say, in 2021, so in that case you will tax it in assessment year 21-22. So in case my employee gets sweat equity shares, it's definitely a benefit for the employee. I should definitely tax it for the employee. You will see what is the FMV of the shares that he got. What is the FMV? They'll give you FMV on several dates. You will take FMV on the date of exercise of option. From that, you will subtract the exercise price which the employee has paid. The balance is going to be the taxable number. But this taxable number will be taxed in which year? It will be taxed in the year of allotment. All right, then see, now my employee owns these shares. What if later the same employee, what if he transfers the same shares? If he transfers the same shares, capital gains will arise, guys. Capital gains, when you're calculating, what will the full value consideration be? The full value consideration will be the usual selling price for whatever he's selling away the shares. But the whole question is, what will the cost of acquisition be? The cost of acquisition will not be the exercise price. The cost of acquisition will not be the amount which he has paid. Instead, the cost of acquisition will be the FMV number. FMV on which date? FMV on the date of exercise of option. In simple words, the same FMV number which you take over here, the same FMV number will become your cost of acquisition later if you sell those same shares. Perfect understanding. Did you understand this? So from in the salaries head, what will you do? Whatever is the FMV of the shares minus amount which my employee has paid, the exercise price, the balance will be taxable. But in the capital gains head, what are you going to do here? The full value later, same shares when you sell away later, capital gains will obviously arise. The selling price will be your usual selling price, but the cost of acquisition will be whatever is the FMV on the date of exercise of option, the same FMV number, you will take that as your cost of acquisition. Perfect understanding. Even this you've understood, right? Now listen, with this I think I'm done discussing with you about all the perquisites we have discussed one by one. I want to discuss with you about a few extra things now relating to the salaries chapter. If you look at the perquisites, see, we began today's session with our discussion on the basic concepts. Then we learned about the allowances and all the perquisites one by one we have completed. Now, after this, the first discussion I think that I should have with you is going to be about the section 16 deductions. Under section 16, how many deductions do you get? You get 3 deductions totally, guys. Number 1, you get standard deduction, which is how much? Which is 50,000 flat. Then number 2, you get entertainment allowance. Entertainment allowance, how much deduction do you get? We've already done the calculation. We've already seen this. Only for government employees you will get the deduction. Do you remember? 5,000 rupees, 20% of basic salary, or entertainment allowance actually received, whichever is lesser. We've already seen this. The reason why I'm discussing this with you is the professional tax part. Whatever professional tax you have paid, even this you will get as a deduction. Now listen, let us discuss about professional tax a little in detail. Who is actually supposed to pay this professional tax? Whose obligation is it actually? Do you agree that professional tax is actually the obligation of my employee? It is actually my employee's obligation. Okay. But sometimes what happens is, even though it is the employee's obligation, some part of it may be paid by employer and some part of it may be paid by employee. Whatever is paid by employer, don't you think it becomes a benefit for the employee? Because employee's obligation, employer is paying. It becomes a benefit for the employee. So to this extent, it will definitely be taxable. Okay, it will be a taxable perquisite. But guys, listen, the total amount, whether paid by employer, whether paid by employee, the total amount you will get as a deduction under section 16. Did you understand this now? So the entire amount which you have paid, whether it is paid by you, whether it was paid by the employer, the total amount you will get as a deduction under section 16. See, whatever the employer has paid, no doubt it's a benefit for you. And because it is a benefit for you, we will definitely tax it for you also. But again, we will see what's the total amount. So there will be totally two tax implications. First, we will tax whatever was paid for you by the employer. Okay. Then after that, we will see what was the total amount, whether paid by you, whether paid by anybody else, whether paid by the employer, what was the total amount that you will get as a deduction under section 16. Okay, perfect understanding. Then listen to my next discussion. I want to give you a sort of a summary. The employer is making payment of premium relating to the employee. For example, let us say employees health insurance premium employer is paying. What is the tax treatment? Tell me. I've already told you. It's going to be exempt, guys. It's a benefit for the employee, but it's going to be exempt. What if it happens to be, by the way, this health insurance should be in whose name? It should either be in the name of the employee or it should be in the name of employee's family. And who is family over here? For health insurance, who is family? For the entire medical perquisite, who is family? Family would be, if I am the assessee, my dependent brother, my dependent sister, then my parents, my children, and my spouse. Okay, so the health insurance can be either in my name or in my family's name. It will be fully exempt. Then what if it is personal accident insurance policy? The employer has taken personal accident insurance policy in the employee's name, and for the employee, he is paying premium. Even this is going to be fully exempt, guys. Then number 3, you have something called a staff group insurance policy. The employer has taken a staff group insurance policy for all the employees. Okay, so the employer is paying premium. Even that is going to be fully exempt. But in case life insurance premium of the employee, the employer is paying, then this alone will be taxable. Are you understanding? I have given you a summary of all the premiums. Health insurance premium employer is paying for me, exempt for me. Personal accident insurance policy premium employer is paying for me, exempt for me. Staff group insurance policy premium employer is paying for me, even this is exempt for me. Only life insurance premium, if the employer is paying for me, this is going to be taxable. Okay, then another summary. This is something which you know about very well. I am just giving you a sort of a revision. Tell me, telephone allowance, what will you do? Telephone allowance, this is going to be fully taxable, guys. Yes, and what about telephone bill reimbursement? This is something which we haven't discussed. To discuss this only, I'm bringing this up. Telephone bill reimbursement, mobile bill reimbursement and all are fully exempt. Okay. What if the employer gives a mobile phone to the employee for use? This, tell me, exempt or taxable? Mobile phone given just for use, tell me, this. This is going to be fully exempt. Mobile telephone just for use. But what if mobile phone is transferred to the assessee? Then how will you calculate wear and tear? It is going to be taxable, but how will you calculate normal wear and tear? Mobile phone, 50% WDV. Electronic gadget, 50% WDV. Got it? This is sort of a summary of the entire telephone discussion. Telephone allowance, fully taxable. Telephone bill reimbursement, fully exempt. Mobile given for use, fully exempt. Mobile transferred, it will be taxable, but 50% WDV you will claim as you will claim as normal wear and tear. Okay, and one last discussion, guys. In section 115 BAC, what will be the changes in salary? One last concept, guys, with this 100% completion in my entire discussion. In case you're doing, about 115 BAC, right? The alternative regime. If you are doing the 115 BAC regime, then under salaries chapter, what will change? Number 1, leave travel concession exemption you will not get. Number 2, HRA exemption you will not get. Number 3, all other allowances also exemption you will not get. Children education allowance, children hostel allowance and all you will not get. But you will still get exemption relating to transport allowance. Remember, transport allowance for blind, deaf, dumb, handicapped employees, 3,200 per month. You will also get the exemption for conveyance allowance. Okay, even here you will get the exemption. Even for travel allowance, you will continue to get the exemption, and even for daily allowance, you will continue to get the exemption. Other allowances, you will not get exemption anymore. So these are going to be your 3 changes, and one more change, section 16 deduction you will not get under the head salaries. So only 4 changes, guys. If you're following 115 BSc, first of all, no LTC exemption. Then HRA exemption you will not get. Other allowances you will not get any exemption. And section 16 deductions you will not get. But you will continue to get exemption under these 4. Perfect, guys. Yes. So with this, we have finally come to an end to our revision of the entire salaries chapter. I just gave you a revision, a recap of all the provisions one after the other. Not only the provisions, even the special points which I've come across in several questions. Even those adjustments I've sort of discussed with you indirectly. Remember the scenarios that we learned under interest-free loan, the scenarios we learned under children education allowance, all of those scenarios which I've given you, they are sort of covering even adjustments which we've seen in several tricky questions. So I think with this you should be done. All right. Even the day before the examination, if you feel that you're falling short of time and this entire chapter is left, you try finishing off this chapter with this video. It will get done much faster than you sitting on your own and doing. All right. So with this, I think we'll close our session here, guys. I'm sure you would have enjoyed the session. I'm sure you must have learned quite a lot about this chapter through this session. All right. Thank you so much. I would love to get some feedback from you all. When I upload it onto YouTube, please share it with your other friends. All right. Bye-bye, guys. Thank you so much.